Morning, everyone. Welcome to day 3 of the meeting. I think we may have one or two members and TAs that are going to be late as a result of lift problems at the Hilton this morning. But I think we will make a start because we're very lucky to be joined by Nick Barlow from the ISB technical staff. And as we know, one of the sort of big events in the accounting world since we last met was the publication of the new IFRS 18. And of course, that is incredibly relevant in terms of our presentation of financial statements project. Nick, I'm delighted that you're able to join us, having spent 6 years on the ISB's project. I think you're fantastically well placed to give us a briefing on it and to set the scene for our subsequent discussions. So welcome, and I'll hand over to you, if that's okay.
Great, of course. No, thank you very much. I'm very pleased to be here. As you say, it's been 6 years for me working on this standard, and so hopefully I can share with you some of the some insights into some of the more challenging areas, but then certainly explain the requirements themselves. And I'll maybe just try and pull up my slide deck, which seemed to work just fine earlier. And there we go. So again, yes, thank you for having me. And as you have said, IFRS 18 is the new. It's not quite the newest standard, but it is a relatively new standard, just published in April, and one that is quite a milestone in trying to improve communications in the financial statements. It certainly comes out of a lot of external outreach, and particularly with users of financial statements and with investors. And so from a high level, really responds to investors' demand for better communication, and mainly better comparability, and particularly, as I say, within that statement of profit or loss, or the communication of performance in particular. So I'll come back to that, to those objectives of trying to address those stakeholder concerns a couple of times as I go through this, as I think on reflection, those objectives, and in particular that stakeholder engagement that has led us throughout this project, both leading to the changes that were made and responding throughout the process to come up with sort of practical solutions to address those, has really sort of been guiding lights, if you will, to help us work through some of those trickier proposals, which are now the final requirements. So if I move on to what those are, just a brief overview of what we'll talk about today. So IFRS 18 sort of is made up of 3 key requirements, and the first being new requirements to set out a structure, to give a comparable structure in the statement of profit or loss. And so that requires new subtotals and categories within that statement, to give investors a better, more comprehensive, comparable starting point for their analyses. The second key aspect of the proposals is around what we term management defined performance measures. And this is very much a complement to those changes within the statement of profit or loss, trying to give more opportunity for company specific information. And there's a link also in this case to sort of non-GAAP or alternative performance measure information, and bringing some of that within the financial statements where it can be subject to disclosure requirements that give more transparency, and hopefully give a bit more rigor or discipline to how these measures are used in practice. And then the third set of measures is around the grouping of information, or aggregation and disaggregation, and seeks to give investors more material information to give some guidance around how we separate and decide what those line items are, and where they're best placed within the financial statements. So I'll move right into the first section, which is around the categories and subtotals in the statement of profit or loss. And as I said, this is very much coming back to concerns that investors expressed about the diversity in what we see under IS1 in the statement of profit or loss in particular. And as you'll know, in IAS1, we have a requirement for revenue, we have a requirement for profit or loss, but what goes in between those, the line items, the subtotals, is very open to interpretation. And so we see a lot of variability within what investors see today, which they say is somewhat unhelpful in terms of trying to do their analysis and knowing where to find different pieces of information. And so to give an example that we always sort of touch back to, of the sort of the gravity maybe of that problem, was the staff has been working with a sample of 100 entities across the globe, IFRS reporters. And we updated this with our effects analysis and noted that of those 100, 61 of those companies were presenting an operating profit subtotal, but there were at least 9 different definitions of how that operating profit was calculated. And so you can imagine how that makes it quite difficult for investors to know how to compare one company to another without sort of pulling these apart. So IFRS 18 responds to that by introducing 3 categories, 3 new categories. There are 2 others for tax and discontinued operations, but the 3 key new ones are operating, investing, and financing. So giving that structure to the statement, and also 2 required subtotals. So the first and probably most important being the operating profit subtotal, and then the profit before financing and income taxes subtotal. So if we dig a little bit deeper into what those different categories are made up of, I just pulled up an example here of what the statement of profit or loss might look like applying these standards. And so if I started with operating profit, it's defined as the default category. So anything that's not included in investing or financing, or those other 2, discontinued operations or taxes, is considered to be operating. So that means operating profit is a measure of the activities of the entity more holistically, so of its operating activities. And it's not a measure, as some sometimes look at operating, it's not a measure of persistence or ongoing. So it doesn't exclude things like volatile or what people would call unusual income and expenses. They're, like I say, very much trying to capture that holistic operations of the entity view. I think this is a key decision to highlight, maybe that the board made very early on. It had experience with previous projects where trying to define operating in a direct way proved to be problematic. They're very strongly held and sometimes opposing views in this area. So the approach that the board took was rather to try and get consensus around what goes into financing, what goes into operating. And I think there was more commonalities in people's views around those. And so we were able to work with that to define those categories and then avoid debates about the line between what's non-operating and operating. It's simply, if it's not financing or investing, it must be operating. And that's proved to be a relatively successful approach as we have gone through this process. I think we've got a lot of buy-in to that. This operating profit now becomes a lot more comparable in that you know what goes in it. Not everyone necessarily agrees that everything that goes in there it should be in there, but they do know where it is and they do see that it is comparable. And then that's a big step forward, we think, for investors using these. So the second major category is the investing category. And so in this category, income and expenses are classified from what we call investments that generate returns individually and largely independently of the other resources of the entity. And the classic example of that is sort of a investment property type of a investment where it's generating rental income, potentially fair value gains and losses, but this requires very little, if any, involvement from the rest of the entity. And we might look similarly at something like financial investment, where it's generating returns or dividends, but it's sort of from a passive perspective, and nothing is required from the rest of the entity. So these are the key pieces that go into this category. We also include income and expenses from cash and cash equivalents, and the share of profit or loss from associates and joint ventures accounted for at the equity method. And that last one is another one of these slightly trickier pieces to classify, and that's because the way I've described this individually and independently very much subscribes to how some see some of the investments in associates and joint ventures. but other investments are very much made for operational purposes, potentially strategic partnerships. In some jurisdictions or in some industries, we know it's very normal, very usual to invest in such structures because of legal reasons. And so there's a kind of a dividing line between what's an investment in an associate or joint venture that may be operating and one that may be more like investing and what that was meant to capture. And when we go back to what in the exposure draft, we had tried to address this by proposing a differentiator between integral associates and joint ventures and non-integral associates and joint ventures, really trying to identify one from the other. But the feedback we got from that really showed that that was a very difficult line to draw, very judgmental, and in the end, most opposed that. Going through that process, the board also heard, though, the feedback from investors was really, while that might be interesting information, what they really care about is keeping it separate from operating, because for them, when they do their analysis, they're looking to pull these out anyways. They affect the margin because they don't have a revenue contribution. It's a post-tax, post-financing number. And some saw value in looking at separately those things that are not controlled by the entity. And so at the end of the day, the board decided if investors are looking at it this way anyways and aren't as interested in that delineation, let's keep it in the investing category, and that gives the best information for them. Again, very much on this practical, let's present the information so people know where it is to get comparability, and then the users know where to go. And if they like to look at it in a different way, they're free to sort of rearrange that, having known where to find the information in the first place. So our last category is the financing category, and this captures income and expenses on liabilities, where the other two categories captured income and expenses on assets. And the standard differentiates between two types of liabilities. So those that arise from transactions solely for the purpose of financing. And so there's a definition within the standard, which is all about what gets exchanged and what gets received. So if you receive cash or a reduction in a liability, and you will later return cash or own equity, we refer to this as something that is a transaction that involves only the raising of finance. And the significance of that is if the liability arises from these sorts of transactions, all of the income and expenses will be classified in the financing category. And if it is not one of these transactions, so if something else is involved, such as in a defined pension benefit, for example, or a lease liability, the lease liability where you would receive the right of use asset in exchange, only the interest on those goes into the financing category. And this is another one where there was a bit of a change, let's say, and maybe a practical approach. The initial definition of financing was really trying to identify financing as an activity and trying to define it from a very conceptual level, and try to look to what IAS 7 defines as the investing activities, and then trying to improve that. The feedback, again, there was very difficult to respond to. There were very conceptual questions that would need to be worked through. But then again, at the end of the day, the board said, what we're trying to do is provide something that gives investors a view of what's before financing. We have this assets above the profit before financing and income taxes subtotal. We want the income and expense on the liabilities below. There's probably an easier way to do that. And if we can define these types of liabilities, we can capture that. And so this idea of the transactional approach of where that liability comes from made this separation. The other bit around that was that interest on those other liabilities. So if you had something like a decommissioning liability, for example, or the pension liability that I mentioned earlier, we know there's quite diverse views around, is that interest operating? Is that interest financing for the entity? And again, the board looked at that and said, let's not necessarily make a conceptual call on that. It will be a practical decision to say, in the interests of comparability, it will always go into financing. So all interest, unwinding of discounts, investors will always know this is in the financing category. And then For those that disagree with that, there's opportunities through management-defined performance measures, for example, to move that around outside of the statement of profit or loss and to do that analysis separately. So that's the statement of profit or loss for general corporate entities. So if we looked at a bank or an insurance entity or maybe an investment entity, the requirements that we have that I've just explained wouldn't quite address the key performance operating measures for some of these entities. So for example, in a bank, classifying the interest on the financing, we'll keep it in the financing category, whereas all of the income from the interest revenue would be in the operating category, and there would be no opportunity to show a net interest income measure, which we know is quite important in that industry. But rather than try and delineate different types of industries and define who would be able to do something different, the board came up with this idea of the main business activity. And so for those entities that invest in assets as a main business activity, or for those that provide financing to customers as a main business activity, specific expenses are moved into the operating category to facilitate the bringing together of those income and expenses that would otherwise be separated, and thus allowing them to present those key operating performance measures within the operating category. So I think that's what I wanted to say about the subtotals and categories. That brings me on then to management-defined performance measures. And I won't get into a lot of detail here, as these really deal with external measures within public communications, but I thought it was helpful to potentially, well, to make you aware certainly that these exist, and to highlight a couple of pieces. One, as I mentioned, talking about the three key categories, this was really very much a complement to the subtotals and categories in the statement of profit or loss. So where we get the structure there in the management-defined performance measures, we get the opportunity for the entity-specific or company view of what that performance is. So some of that optionality that exists today by which subtotals and line items you can put between that revenue and net and profit or loss number, you can now do that still, but within this construct of management-defined performance measures. It's very much a subset of what we see as non-GAAP. I'll highlight that. So it's things based around that statement of profit or loss being very much focused on that being the objective or the main goal of the project, to focus on performance measurement and mainly the statement of profit or loss. So things like adjusted operating profit would be a management-defined performance measure. Things that are based on other measures, such as a free cash flow, for example, would be outside of the scope. So there will still be non-GAAP measures out there today. This is just very much a narrow version of this. But the other reason I wanted to, so that complement was one reason I wanted to talk about this, because as we implement structure, we also sort of still give the ability for this company-specific information. But the other reason that I wanted to highlight it is that it was not without its own challenges, and it sort of highlighted again how outreach and communication with our stakeholders is really key to being able to resolve some of the issues around this. When I first started with the organization, we were sort of just getting started in this process of reaching out to the regulator community. As I mentioned, a lot of this is based around capturing measures that are non-GAAP or alternative performance measures, which in many jurisdictions there are specific regulations and guidance on. And so we had to work very closely with those regulators to ensure that their ability to continue to regulate according to their legislation was maintained, but also that their concerns were addressed. They obviously they have rules to restrict what goes within outside the financial statements reporting, so things like the management commentary, and to restrict things that they think may be misleading. They obviously had concerns about what kinds of things will end up in the financial statements now, and how do we get control over those things. And so we went through a quite rigorous process of back and forth with those regulators, and really changing our definition. So it has really evolved throughout the process. And it is different even than what was proposed in the exposure draft, to try and address those concerns of regulators and make sure that they still have the ability to do what they need to do as regulators, but we're still able to bring this concept in and bring the transparency across all IFRS reporters. So I'll jump to the last bit, which is around grouping or aggregation and disaggregation. And as you can imagine, this is a difficult one to deal with, as we're by definition, it requires the use of materiality, which means it's different for every entity. So to try and get comparability in this area was a bit of a challenge. And so what we've tried to do is come at it from a few different angles. And the first is a very high level, sort of more conceptual basis in defining what the roles of the primary financial statements and what the roles of the notes are. And I shouldn't say just, that is to give guidance to help companies to decide what's the appropriate level of disaggregation within the primary financial statements, so the statement of profit or loss, and what's the level that's appropriate to then disclose in the notes. And it sort of appreciates within the guidance that materiality can't be the defining factor that decides what goes within the statement of profit or loss, or any of the primary financial statements, as you would end up with just too disaggregated of number of line items to be understandable. So the sort of practical consequence of that is that we've got rid of the minimum line items, and there's an ability to judge what level of aggregation is appropriate. So the next level down alongside that is guidance around the process of aggregation and disaggregation, some high-level principles around using characteristics, and we've provided characteristics that entities should think about in grouping that information, and then provided additional guidance around labeling to make sure that what is being presented is represented in the clearest possible way. And then some additional guidance for, when that's not possible, if you need to sort of aggregate things that are not material, but add up to a large number, and don't really have a better way to describe this rather than other. Some guidance around what additional information would be helpful to disclose in this scenario to help users to understand, this large number is not a material number. And then the final one is some very specific requirements around disclosure of items by nature when an entity presents by function. Investors were very much interested in having what we would have called a matrix approach. So when you have cost of sales, for example, knowing every item by nature, employee benefits, for example, depreciation, that makes up that employee benefits number. We knew early on that was going to be impossible based on what we'd heard about how companies account for these in their systems. But the board did think a higher level, all expenses by nature, would be achievable, and that was what was put in the exposure draft. But we went through, again, in this case, a quite extensive period of outreach. During the exposure draft period, we had a group of 50 companies volunteer to do a fieldwork exercise with us and to recast their financial statements. And through that process, we were able to really understand the challenges that companies faced with their systems and trying to dig out the by nature items at a group level. I think that was sort of the key learning that we had, is that detailed information is available lower down in the entity, but at a consolidated level, this is quite difficult because systems, in most cases, not all, but in most cases, are not designed to be able to provide that information. And so there was a lot of back and forth between both preparers, but also investors, as they really didn't understand why preparers weren't able to give this information. And so a lot of the meetings where we brought together both preparers and investors in the same room to have these conversations really helped us to move things forward and get to our final solution, which is to provide a disclosure of specific by nature items. And those specific items are what they are because of existing requirements today, and our understanding that entities have other systems available where they can get some of this information. Many will still have to go through an exercise that will be relatively costly, but far less so than what we understood would be the case under the original proposals. But also linking those by nature items back to the line items in the statement of profit or loss gave investors a good amount of the information that they were looking for to understand the linkages between the different statements. So I think through this process of bringing those two groups together, and sort of really understanding both points of view, we were able to come to a solution that sort of bridges the gap and has been, I think, a good compromise, and gives both a little bit of what they wanted. So in the interest of time, I'll just be very, very brief on the statement of on the package of requirements, just to highlight that IFRS 18, sorry, replaces IAS 1. Much of what was in IAS 1 has been carried forward unchanged, so things related to the balance sheet. For example, a few pieces have been moved into IAS 8, so things around accounting policy choices has been moved to IAS 8. And there were some specific changes made in the statement of cash flows, IAS 7, as amendments within the project, again, to try and get comparability. Some easy wins we're seeing, if you will, to sort of eliminate some of the choices that are available today and try and make that statement more comparable between entities. So I think I will stop there and see if anyone has any questions.
Thank you very much, Nick. That was really interesting. I think a lot of very helpful insights into the process and the deliberations that got you to the final requirements in IFRS 18. And that's very helpful for us as we're in the sort of very much in the early stages of our project. What I'll do is I'll open up for comments from board members, questions. Yeah, Liang, start us off, please.
Thanks for the presentation. Actually, we very appreciate the ISB's efforts to do this project and to improve the presentation and the disclosure in financial statement. But actually, I'm not sure whether you have heard about this. In particular, in my jurisdiction, I come from China, and actually, when we have some survey or roundtable discussion in the process of the ED, actually, quite a lot stakeholder in my jurisdiction raised the question whether it is necessary or whether it could provide relevant information when we classify the P&L item into operating, financing, and investing. Actually, in current business environment, quite a lot business and enterprise, they just combine everything together. That means they may not, in their daily operation, actually they may not so care this is operating or financing or investing. Maybe I can give some example, such as they run the business, they do business with the customer and the suppliers. Sometimes maybe they want to improve their business, so they may have some financing activities with the customer or suppliers to provide some trading financing, no matter enhance, extend the credit period or do something together with the bank. Or for some company, actually, maybe in particular in biological companies, they develop medicine or develop some bio matters. But when they have some money, maybe in they also invest in some newly developed, newly established entity. Actually, this is part of their core business. So many stakeholders in my jurisdiction just raise the question whether they should classify the item now they put it together as the core business into operating, investing, financing. So I understand SB have considered of this, but finally the final standard still classify this item into 3 categories. Would you please give some response about this, or what do you think about this in the process in developing the standard? Thank you.
Yeah,
Thanks,
definitely.
Liang.
Oh, sorry. Yeah, thank you. So we certainly considered that, and this is what I was referring to as some of the, you talked about some of the industry specifics of pharmaceuticals. I mean, we heard very similar comments from entities in real estate, for example, and we do appreciate that there are differences, and so there. I mean, there is. Sometimes it is very clear what is an investment in an associate or joint venture that is more closely related to operating. Other times it is very clear that it's investing, but many times it's very difficult to make this distinction between the two. And so, as I say, we certainly talked, we had robust discussions with many stakeholders on this and went back and forth. And as I say, the reason that it came down at the end of the day is that despite how the company sees it, the way that the investors are looking at it. And keep in mind, this is from a global perspective. I mean, we do appreciate that in different markets, there may be different views, but we're trying to get a standard that gets comparability for an investor to be able to compare companies across the 144 jurisdictions that we're operating in. And the majority of investors' view from that perspective was really, for them, it's the most helpful to have that information separated, even if the company isn't seeing it that way from the perspective of their analysis. That's what they're looking to do. And so to have that outside of an operating profit was more helpful for their analysis. And that, as I say, there was lots of back and forth, but that was ultimately the deciding factor that the board decided that that's why that should be within the investing category and not within operating, regardless of those particular circumstances.
Thanks, Nick. So question from me, I guess, reflecting on your 6 years with the project, and obviously this is relevant for us as we're very much in the foothills of our own project. I just wonder whether there were sort of things that, if you look back, knowing what you know now, that you would tell yourself back in 2018, do that, or don't do that.
Yeah, well, that's an almost impossible question to answer in a way. I mean, obviously, lots of the debates we would have probably liked to avoid and just jump to the answer. But in some ways, you almost have to go through the process to get there. I mean, I think the one potentially that comes to mind that I didn't really talk about, but that was really the most challenging, because it was a proposal that wasn't taken forward, and we maybe could have been quicker to realize it wasn't going to work and allocate our resources elsewhere. I think that's maybe a learning. And what that proposal was around trying to define unusual income and expenses. So the original exposure draft had tried to put out had tried to define this concept based around persistence. So it is an expense or an item of income expected to persist into the future. And we got lots of feedback that said this is a great idea to do this, but nobody could agree on what was the right definition of that unusual item. And so we went around in circles for, years, really trying to resolve that question, and just were not able to in the end. And so, I mean, I think that's certainly one. Had we known, what we know now, we probably would have abandoned that concept much earlier on and sort of, as I say, diverted resources elsewhere. But as I say, some of these things, I think you almost have to go through the process. Obviously, we would have liked to get to the specific nature disclosures faster, if you could, but I think we needed to go through a process of understanding the views of both sides of that debate, really understanding what the problems were, and trying to bridge the gap between the two, because there wasn't a perfect solution, particularly in a world where some entities, I mean, it clouds the picture, because some entities give the information that the investors want today. Some are perfectly able to do that and can sort of push a button and get it, but others very much just would need to completely redo their ERP systems. And so you're sort of working in a very diverse group. And so it's, to some respects, I think, obviously, had we known now, we would have just jumped to the solution, but it was a bit of a discovery period to get there.
Okay, thanks. That's very helpful. Abdullah, and then Dave.
Thank you, Chair, and thanks for the presentation. I have two questions. The first question would be about the disclosure for others. I know the term others pops up in every single financial statements, and depends on how you look at it from an investment point of view, from an investor point of view. you would want to have more information about it. From a CFO point of view, you just have all these kind of, let's say, items that it's like you don't find that there is a materiality level to have them as a separate line item. How would I think of striking a balance between that? What did ISB thought of that, and what was the feedback, or what was the feedback that you got from investors and also from preparers at the same time? The second question about the management performance measures. I know those are new things, but from an assurance point of view, I guess that would be a bit of a challenge to look at them. But what kind of how would I say this? But what were your thoughts in terms of an assurance point of view, or you just left that for subsequent thinking to look at them? Thank you.
Thanks, Abdullah. Nick.
So on the first question around the other, I mean, I think the initial feedback was, oh, you banned the use of other, and we certainly try to get the message across that that's not true. We very much appreciate that sometimes there just is no better way. We need to be practical. So what we tried to do is to give guidance, as I say, to give more guidance in the process of what you would think about for disaggregation. So we're hoping through this process, people will have a rethink alongside the need to rethink the classifications anyways for the statement of profit or loss, to sort of rethink about how they've grouped things together. Now with some more guidance about what you should think about. As I say, we put some characteristics together that we think are helpful to say, if these characteristics are, if you have these things in common, you should think about grouping those together. If you don't have those things in common, you should think about separating them. There is judgment there. There always will be. So that's one element. The other element was around giving more guidance about, okay, now you've got these characteristics. If that's what you've grouped it on, use that as the description. These are sort of anchor. You can go back to be a bit more helpful about why these things are put together. And we hope that avoids some of the other. And then the final piece is around this concept that we've said, look, if you have other and it's just other, and it's a small amount, I don't think anybody is worried about that. And as I say, I think we're practical. It's what we've said is, if there's a really large balance, that the best label you should come up with is other. Where users might reasonably question what is in that, it's so big. Go back and give some more disclosures about that. And we've given some examples of what that might be. We've not been prescriptive, but said, look, if it's that big that somebody might question what it is, it's material information to know, even just that it's made up of a large number of immaterial items. And it may be as simple as doing that. It may be giving a bit more detail. Maybe this is the largest item and it's X number. But again, a bit of guidance around, just give some more information. So not banning other, but just trying to give some tools to first really think about, have you disaggregated enough, label it appropriately. And, if you still at the end of the day are other, if it's really big, give a bit more information. And sorry, I forgot about the
Renee.
Sorry, would you say?
Renee, to you.
Second question.
Oh, sorry.
So I just realized there was a second question there about the management defined performance measures and assurance, and we certainly did think about that and spoke with the with a number of the audit firms, obviously, but also with the International Accounting Audit Standards Center to talk through how we could make those requirements as auditable as possible. And I think really the key understanding is that we're not asking auditors to go and opine on, is this a good measure? Is this a bad measure? But rather, is this what management says it is? So if they say it is before unusual items, they've given a definition of what unusual is. Do these items meet their definition? This is what we're expecting in terms of audit. And I think where our thinking is, and through those discussions, we're thinking it's also, we have some of this type of information today under IFRS 8 and segment disclosures, and auditors are able to get through that today and use some of the same tools. I think a lot of it will be around companies having processes in place and giving the proper disclosure about how they've defined things. And then from there, an auditor has tools to then verify, is this what the company says it is?
Okay, so what I'll do, I think Just in the interest of time, I'll just take the 3 questions that are on the table from Renee, then Fabienne, then Dave, and then come back to you, Nick, for
perfect.
responses. So, Renee, to you first.
Yes, thank you. Can everyone hear me well?
Yeah,
Yes.
we can hear you well. Thanks,
Great.
Renee.
Great, thank you. Good morning, everyone, and thank you very much, Nick. Very insightful presentation. So I reflect on the approach that you took to deal with a very difficult issue with the classification of expenses, and bringing together through your consultations and outreach both the preparers and the users in the same conversation to really get them to understand each other's point and to provide you additional insight on how to move forward as a standard setter. So that to me seemed like it was a very powerful approach to dealing with a very complex and controversial debate. So I think we can learn from that and consider that, because I think we have our own share of debates as part of our own project, and I think bringing the two sides together seems to have been very powerful for you. And then just related to that, just a question, you ended up going with flexibility for operating expense, allowing preparer to pick function or nature, but you still prioritize nature as being a requirement, and if it's not on the face, then it's in the note, right? So that was the compromise. How did you end up prioritizing nature? I suppose it's because it was already your original view, because that's what you went out with in the ED, I think, if I recall.
Okay, thanks, Renee. So Fabienne and then Dave.
Thank you, Jan. Thank you, Nick, for your very good presentation. The IPSAS one on the presentation of financial statements does not have OCI at the moment. And I know it raised some questions on the conceptual foundation at the IASB, and I wanted to know whether, I was wondering whether OCI had been redeliberated on that basis as part of the IFRS 18 development. Thank you.
Thanks, Fabienne. And Dave, and then back to you, Nick.
Hi, Nick. Thanks from me as well. Really great presentation. My question related to, in the back end of the development of IFRS 18, the ISSB was established. And just wanted to know, in light of our sustainability project that's ongoing, were there any discussions between the IASB and the ISSB on any sustainability information that should be incorporated, even if it went nowhere? Just wanted to know if there's anything we should watch out for on our side.
Thanks, Dave. So back to you, Nick.
Great, thanks for all those questions. So I'll start with Renee's about the flexibility around function or nature, but the prioritization, I mean, really goes back in this case to, this was the key investor demand was to get more information about nature. I think there was always an appreciation that both are useful, and nobody was going out and saying we want a company that presents by function to change and present by nature. The investors were saying, no, that is still useful. We want to know that. But if they do that, we also need to know what's the nature. And that was really driven on, because they said that helps them to forecast better. If they know, what's the detail of the employee expenses, for example, that helps them to then better forecast, okay, what's that employee cost in the future? Now, so I mean, that was where we went, what drove to those disclosures. And I sometimes hesitate to say that it was a prioritization. It was simply that we didn't have feedback going the other way. So if an entity presented by nature, nobody was saying, well, group those things together and give us by function. So had we had that feedback, I think we very much would have considered that and gone about through a process to see whether that was feasible. But nobody had asked for that. So that sort of led us to focus in on this particular bit of the disclosure. And so it does seem like a bit of a bias in that direction, but it was very much just stakeholder driven, that was the information that they were after. And as I say, to drive the forecasting. So I think that brings me to Fabiana's question about OCI. I mean, the very short answer is no, but the slightly more elaborated version is, early on in the project, there was debate about whether, there was feedback and debate about whether OCI should be tackled. again, I guess similar to the operating profit, we knew there were strongly held and diverse opinions about that. Some wanted us to go and rethink the basis for OCI. Others wanted just specific targeted improvements. We also had projects going on at the same time for financial instruments characteristics of equity, for example, at the time. And so it was better thought those types of projects will deal with those elements, and to try and recreate OCI from scratch was just not going to be a feasible thing, along with everything else we were doing in the project to deliver it in a timely fashion. I mean, we already, as we said, I've been on this for 6 years, and the project preceded me for even longer. So there was very much a consciousness that the more things we add, the harder it becomes to deliver. And so it was maybe a hard decision. It was a little bit before my time, but certainly a conscious one to say, let's focus on what we think we can tackle. And so I think that brings me to Dave's questions about on the IPSASB, and that's right. That timing was interesting because we did overlap at the end a little bit, and we didn't. I think the discussions went about trying to keep a line very separate between what the sustainability disclosures would cover and what the accounting disclosures would cover, and so their staff reviewed our early drafts. We reviewed theirs, and we tried to, as much as possible, keep consistent language and try to make sure that we weren't sort of, not step on each other's toes, to say it in a sort of colloquial way. But we very much, we're trying to try to keep the line that they have their mandate, we have our mandate, and let's try to not overlap. I think the project management commentary and the bit I talked about management defined performance measures were probably the most obvious potential candidate, but because we were so focused on the statement of profit or loss, and our definition comes down to subtotals of income and expenses, we were quite comfortable that wasn't going to overlap with the sustainability disclosures. Now, I've heard that question raised, and then as that develops, that may become a question again in the future. But as it stands, because we're so narrow in that definition, we think we're in different pools.
Okay, that's great. Well, I think that there's been some really useful insights there, and also some resonances with some of the discussions that we've already had. You know, for example, over scoping, you know, the project in the first place, and what would be in and what would be out, because obviously this does, you know, there's, you know, like you found with sort of cash flows and so on, there's obviously linkages, you know, with other areas, and we've got standard on reporting on budget information as well, which is important from an accountability perspective. So, but it very interesting, and similarly also the points about nature versus function. Again, I think we'll you know, that's something that we're going to need to think about, you know, because a lot of our challenges will be around the performance statement format. So I think thank you very much for the presentation today. That sets us up very nicely as we move into our discussions on that. I suspect we will want to keep in contact as we move forward. You know, we've certainly got valuable experience from the Canadian Public Sector Accounting Board, who just completed their project, but I think it's useful as well, given the extent to which we're going to draw on IFRS 18. To be able to tap into your experience as well. So thank you very much for the presentation today, and we look forward to keeping in contact.
Great, thanks very much for having me. Glad I could be of use, and certainly reach out in the future. Happy to provide more insights if I can.
That's great. Thank you very much, Nick.
Thank you.
Okay, so with that, we move into the session on presentation of financial statements. Clearly, this has been a very busy quarter as we got the task force up and running, and we had IFRS 18 to begin to work with, which we didn't have before. So, you know, on behalf of myself as task force chair, and Anthony, just to say thank you very much to the task force members for a lot of very good discussions in the two meetings that we had during the quarter. we unfortunately do have limited time today, so we will get as far as we can through the papers that Anthony has given you. If there are any that we don't have time to make it through this morning, then we will hold those over. They won't go away. They're all issues that we will need to focus on, but in the interest of time, obviously we've got natural resources coming up after lunch. So without further ado, Anthony, hand over to you.
Great. Thank you, Ian. Good morning, board members, technical advisors and observers. It's a pleasure to be back with you and to receive your comments and direction on Agenda Item 8, presentation of financial statements. As Ian has already mentioned, we've made significant progress over the last quarter. It's become clearer the process that we're going to follow for the development of the illustrative exposure draft and the consultation paper at the same time as part of the first phase of the project. Together with the task force, we've been able to test that process regarding the issues related to the statement of financial position. This will be the first tranche of papers we'll talk about. And then the drafting of specific sections of the illustrative ED, what I've been describing as the front end sections of the ED, scope, purpose, definitions. A huge thank you also from me to the task force. That has been immensely beneficial, and all the task force members are highly engaged in the project and have been instrumental in helping us advance the work to date. Also note that the CAG is highly engaged in the project, and we highly benefit from their input also, and they provided useful feedback on Monday. And when we get to that specific agenda item, we'll bring in Fabian for their very useful comments we received. Finally, thank you to board members and TAs for comments that have been forwarded offline. That is always hugely useful for us to consider and work through, and a number of points that I can then take away and follow up with the task force, but maybe didn't necessarily need to be raised at the board meeting. So thank you. So we'll get started. Just a short project update. The objective hasn't changed. It's to improve the communication effectiveness of information reported in public sector financial statements. The key point we always go back to is that we are developing a new IPSAS to replace IPSAS 1. What has become clear over the last quarter also is that process of developing a new IPSAS is going to be developed through multiple sources. We've got a useful existing public sector guidance in IPSAS 1. Yes, we'll bring that forward when relevant. We've got IFRS 18. We've got GFS considerations. We go back to the notes we've got on previous feedback we've got from many IPSASB outreach events on presentation of financial statements, identifying public sector specific issues. We're working through them. So we've got multiple sources. My main point really in raising that is that I do not want anyone thinking that this is a straightforward IFRS alignment project. IFRS 18 will be a very useful starting base, and we will use it as a starting base, but we are bringing in multiple sources to develop a public sector specific standard that will be fit for purpose in the future. Just the timeline, and I think we can unpack quite a few important points from this timeline. One is that we are still focused on June 2025 for approving the CP and illustrative exposure draft. For the issues, we are starting with a statement of financial position today. We've heard from Nick that there was a key focus of the ISB on the statement of financial performance. That will be a focus of this board and the task force over the September and December quarter this year. So you can look forward to that, but we've started with, to get started, the statement of financial position this meeting. But don't worry, the statement of financial performance is coming. And we've also already had very useful feedback from our, our open sessions in previous meetings. The other aspect of this is that when we discuss separate issues, we are breaking it into three components. And first, it's the discussion of issues. We get feedback from the board on the issues. Then we'll go away and start drafting the illustrative exposure draft. And then from those two steps, then we can go away and synthesize the information and summarize the information and develop the exposure draft. For some of you, that might feel a little bit back to front, but because we've got an existing standard, IPSAS 1, because we've got IFRS 18, makes sense to work through this process and working through the issues and looking at what changes will come through in the illustrative exposure draft and allowing that to identify the issues that then need to be highlighted in the consultation paper. So, of course, the consultation will have the preliminary reviews, and that will be very important. So just an example of how those steps will work. So today we'll talk about the statement of financial position, the issues, to give staff the appropriate direction to develop the exposure draft. So that's now this meeting. In September, we'll bring back the draft exposure draft on the sections of the statement of financial position, and we'll also bring back the chapter in the consultation paper on the statement of financial position. So that's very much the flow that we're following. And then next meeting, we'll talk about the issues for the statement of financial performance. Oh, sorry, I was going to quickly mention another really good important point is the focus group meetings that will hold over the early part of the first half of 2025. So by that stage, we're expecting to have the board would have worked through a complete set of financial statements. We would have had good board direction on the statement of financial position, the statement of financial performance, and the statement of movements and equity net assets. And we can go to those focus group meetings and discuss with them a complete set of financial statements so they can see how the whole thing works together. So those are going to be really important meetings. So we've definitely got that as part of the plan. We're just holding back a little bit so we can take a complete set of most likely different approaches that we can discuss with them. So I might just pause there and check if there's any questions on any of that around process.
Okay. And I think just to say, I think September, obviously we've covered quite a lot of ground through December, March, and this meeting. And I think that'll be helpful to actually see that package of materials so that we catch up with, the consultation paper in particular and see, that presenting the key issues that we want to get input on. As opposed to some of the more granular issues that will just appear in more detail in the illustrative exposure draft. Claudia.
Thank you. I just want to add what you said. I really appreciate if you would have side by side always an idea of what we want to give to consultate in the CP. Otherwise, we are working deeply on the illustrated exposure draft and get a little bit lost where we want to consultate our stakeholders, especially sometimes maybe when we have an SMC and not only in PV. And then I'm struggling also a little bit when in the presentation from Andrew, that the project drivers are. We started that presentation with the conceptual framework and came later on, then we have then the IFRS 18. In the documents we received, it's the other way around. We start with IFRS 18 and then have a look to the conceptual framework. It's just more a communication issue when we starting going to the CP to explain what was the first source and what's the second source.
I mean, I think it has to all come together, frankly, and so it's quite hard to say, which comes first. I think the thing about having IFRS 18 now as actually sort of somewhere that you can start off from and to anchor it from actually is probably, given that's we're going to end up with an illustrative exposure draft, it's probably quite helpful to have that just as the foundation, and then you can draw on the other sources. And if you look at some of the task force papers and so on, you can see that we're using that to hang it together. But that doesn't mean that we're going to lose anything in terms of bringing in the conceptual framework, in terms of bringing in the public sector specific material we have in IPSAS1, but we need something. So it's a project management as much as anything else. And I think the more you see of this, and I think this has come through this quarter, there's a lot of very detailed issues which we'll need to, come to a view on. Actually, many of those would not be, significant enough to ask SMCs on. Certainly, there aren't particular areas of judgment and so on. It's essentially, much more a sort of standard setting task. So that there's a balance here, and the CP will need to cover the key high level issues and really open those up for debate. So in a sense, we're going through a filter process to then work up to, okay, right, these are the key issues that we see really needing the strategic input as opposed to the detailed level input. So it's as much a project management issue as anything. It rather comes back to the quote that Winston Churchill said, "Sorry, I wrote you a long letter. I didn't have time to write you a short letter." And in a sense, actually working through the issues in the illustrative exposure draft will then help us to write a short, concise CP that really focuses our stakeholders on what are the key strategic issues, as opposed to perhaps some of the more housekeeping issues. So I think, though, to your point, seeing it hanging together, I think that's going to be really important, that we consolidate everything that we've done to date in September, so that you can see the sections of the CP which we've already worked on, what's there in the illustrative ED, and where the gaps are, and relating those then into what we're going to see both in the discussions in September and December, and then going forwards. So that's really, it's an unusual project, but that's the way it's sort of making sense to tackle it. Back on that.
Yeah, I understand it, everything. The only thing only issue I have still is we should make sure that we, at the end of each board meeting, are clear what it's now we take for the CP. Otherwise, we got a little bit lost in the track. And even when we come to the next meeting, we develop the next step and we figure out, oh, maybe it's not longer, but it's like that we have like a tracking record, what we think, what goes to the CP. Otherwise, I believe there could be all of these little detailed things we maybe got lost a little bit.
Yeah, I think that's a good sort of summary at the end of each of the, each meeting where we've got to. And I think in putting together what goes in the CP and where we are on the illustrative ED, we'll need to be very clear about these are the headings that we think we're going to cover, and when are you going to see that, so that you can see how that it is all being managed. Ross?
Yeah, I don't have much to add. I think Ian covered most of the points. I think when we started the project, we probably had a more conceptual, grander aims for the project. But when you actually get into it and look at the issues, and IFRS 18 being out, I think it is a fine balance between firming up what's going to be in the illustrative ED and the things you want to get feedback on in the consultation paper. I think my perspective from a staff side is CPs are very difficult to write effectively to get good feedback, and embedding the illustrative ED I think is a good innovation for these types of topics where there's a need to bring the conceptual to the practical. And I think the presentation we just had from Nick kind of identified that they spent 6 years and they kind of reopened a lot of really big issues, and they did make some big changes, but probably not as big as they thought they were going to. And I think we might end up in the same place, I'm not sure. But I think by having that illustrative ED when we go out with the consultation paper, we'll get richer feedback on those conceptual topics. But I completely agree with you, kind of starting to mark down those issues where we need to have a richer, open consultation discussion in the CP now, so that we don't forget them at this time next year when we're closer to finalizing the CP. But the other thing I would say is, having written a couple of these, and they will evolve. Every meeting will kind of go back and forth on the CP. It's because it's so open. But the one thing that I think will start to bed down earlier is the illustrative ED, because the conceptual discussions sometimes don't directly map across to the practical things you're going to put in the reporting standard. So I think it's a fine balance. It's a good way to get good feedback. And by the time we're finished, we will have a good CP with an illustrative ED in it. But it will take the next year to probably build it right.
Thanks. Abdullah.
Thank you. And I like the idea to have the illustrative ED. I thought it was a good idea for preparers and our constituents to see what they would be expecting, and especially from such a standard, they are being patiently waiting for it. And that is leading me to my second thought, which is looking back into the forum we had back in Portugal in 22. The expectation was a bit high from this exercise, but one element that I didn't see here, that we heard lots of comments saying the public sector needs are different from the private sector. What I mean by that, the public sector would be having some items that they don't control. So we need to have something for the controllable, non-controllable items. And again, there are these items that the public sector would be an agent for the state, and how would they deal with that? I'm myself are struggling with that, even though we try to write clear description for that and how to deal with it, but still I'm looking into different jurisdictions, and that would be one of the main issues I would expect to come out from the comments from our constituents on this. So that would be one of the elements. I'm saying I would align with IFRS 18, but I would look into these specific sector issues, not just some issues or align with the CP, but these specific sector issues that have been raised by our constituents. Again, the last thought I thought, I'm expecting to have lots of different views from jurisdictions about this, because everybody would want to align what we are doing with their expectations. And the rest, I'm agreeing with having the IED, and I think it's a brilliant idea. Thank you.
Ross, you want to just come back on that? I'll go to Angela.
Yeah, it's an interesting point. I'd have to maybe take it away and think about it more, but we have 5 standards on disclosures and interests in other entities that deal with those type of arrangements. I'm not sure our general presentation standard is the right place to deal with, reporting on your interests in other entities, so assets that you might manage but not control. Again, I have to think about that a bit more, but
yeah, I thought of that, but again, just that is the expectation from your constituents. Even if you don't bring it, just have something in your communication to it, or have something to it.
Yeah, I mean, I think we're going to have to bridge a number of these issues, and we're going to have. And I was quite interested in that nature versus function debate, because I've just been around that with my SIPFA hat on in terms of non-profit, and we actually decided that actually nature was probably a less onerous presentation to have, as your primary sort of approach. So just interested in that. So I think there's going to be a number of these things, and again, those are the sorts of areas where I think the CP will come in, because actually that's a way of exposing that thinking in a way that you can't do through the illustrative exposure draft. Angela.
that's right.
Thanks, Ian. I am reflecting on Nick's presentation. I'm even more supportive of the CP-ED approach, given that mix between concept and practicalities. But I think where the CP could be helpful for us is around what is the problem that we're trying to solve, the IPSASB. I reflect the ISB had a very clear definition of the problem around the performance statement and non-GAAP measures, and really driving that comparability for investors. And I've heard what is the problem a number of times over the last few months in relation to this project. What is the problem that the IPSASB is trying to resolve? And sometimes comparability between jurisdictions doesn't necessarily drive a lot of constituents in the space. So I think where the CP could be helpful is being really clear about what is the problem we're trying to resolve, because I think that helps the guiding light when we get into responses as to what's the primary thing. And I heard Nick talk a couple of times about coming back to investor demand and comparability. So it's something I think where the CP can help us a little bit, but at the same time, if you went down this route, we have the practicality of this is how it would look in an ED. So it's just really a reflection after Nick's presentation.
Thanks, Angela. I mean, I think we will go back into, in the CP, inevitably what is in the project brief, because we did do quite a lot of work before you rejoined the board on the project brief stage. So I think we need to go back to what's in the project brief. On that, I think we will need to be quite disciplined, because what's happened in the past when we haven't had that robust project brief design phase is we then sort of start the project and reinvent it halfway through. Whereas I think actually we did a good survey of what the issues actually were in the project brief. So I think we need to make sure that we pull those back in. And as you say, then that focus that we put in the project brief will then guide us. And I think, as we so often find, at some ideal point in the future, maybe comparability will, when the capital markets really start to wake up to the availability of the information, will become more important. But at the moment, actually, I think it's much more a jurisdictional focus, and then making sure that we've got all the relevant concepts. And that's where, things like, actually, do we need an equivalent of OCI come in? Because that certainly is not helpful at the moment without OCI and things like that. So we will go back and make sure we're anchoring the CP in the objectives in the project brief. Okay, so I think that's a useful discussion to actually ground us, Anthony.
Oh, just one quick reflection, hearing Abdullah's comments, that we're already facing it this meeting, and that I've been receiving comments from members around coming in based on what they're used to in their individual jurisdictions. I really liked Nick's comment at one point around, it wasn't the exact words he used, but they were developing an international standard. And of course, so are we. So every jurisdiction has their different background, but we need to almost lift ourselves up above that, and we're developing an international standard. So we're going to continue to face this challenge around what individual jurisdictions would ideally want based on what they do now, and developing an international standard. So thank you.
Yeah. Thanks. Okay. So move us forward then.
Just briefly, also on agenda item 8.2.1, we had a good discussion with the task force around the content of the illustrative exposure draft, and just making sure we were clear on that. And the main outcome of that discussion was that the illustrative exposure draft would be a complete exposure draft, obviously at the illustrative stage. And we weren't going to be cutting out items or seeking to focus only on specific areas. That is really important for constituents to see how everything fits together. And that's more important than, very important for a replacement to IPSAS 1, because it's got a lot of overarching principles and then specific requirements. So it's very hard to understand the requirements if you don't see the principles. So you do need to put the whole thing together. So keep moving. Cool. So then we move into the first tranche of technical papers, and that's around the issues of presenting the statement of financial position. I feel it's quite important from a starting perspective context that as working through the project brief and through various outreach meetings, we have not identified we've not heard any noise around significant issues around the current presentation of the statement of financial position. Nobody has told me it's fundamentally broken or if there's any fundamental flaws with the current statement, but consistent with the project brief, we are looking for opportunities to enhance, improve the existing requirements in IPSAS 1 that haven't been updated substantially since 2005, and I was about to say looking at what IFRS 18 did, but as we heard from Nick, IFRS 18 did not have a focus on the statement of financial position. Yes, they did outreach and early days research, and no issues were identified. So I think that's quite important context. We've got some issues which we're going to get feedback on, but we've got a statement that at the moment is not fundamentally broken, in my view, and what we've heard. Okay, so the first substantive issue, and I would describe this, would be fair to say that this is the main paper that there is scope for different views. So we'll allow for a bit more discussion on this item. So this paper, agenda item 8.2.3, considers the classification of assets and liabilities and classify them into broad groups on the face of the statement of financial position. The task force considered whether there was one classification approach that should be used in IPSAS. That was our starting point of our discussion. Could we settle on one? And the task force noted that the current non-current and the financial, non-financial classification approaches, in the two main approaches we looked at, are very similar. And there was not one approach that was obviously better than the other. Yes, there's benefits of both approaches, but we couldn't say one's a slam dunk, let's use that one. We could see both approaches being equally applicable to different types of entities within the public sector, where it could be useful for one and another approach could be more useful for another, maybe on different levels of government or different types of entities. The task force therefore recommended that the IPSAS should include two general approaches from which an entity would choose from as an accounting policy choice. So this was a question that we specifically raised with the CAG to get their feedback on, again, whether they thought the preferred one approach and whether we could find a consensus there. And also a question for the CAG around what degree of flexibility should we allow. So definitely hand across to Fabian.
Thank you, Anthony. So yes, on the first question, which was the proposed classification approach, and that most appropriately meet the objectives of public sector financial reporting. So on that one, many CAG members expressed the view that the current non-current approach, being the traditional approach, shouldn't be called into question as it's not broken. Constituents well understand the structure it provides for the statement of financial position, but it provides a useful overview to help users assessing an entity's solvency and liquidity. Other CAG members advocated for the financial and financial approach. They considered it was better suited to the long-term financial sustainability focus of many public sector entities, as it provides useful distinction between assets and liabilities held for service delivery purposes and those available for financial purposes. So then CAG members were asked to what extent the new IPSAS and the presentation of financial statements should allow flexibility for the proposed classification approach. And here, many CAG members supported providing the flexibility for entities to choose from a current, non-current, a financial, non-financial, or an order of liquidity presentation approach, and that would reflect current practices across different jurisdictions. Other CAG members suggested retaining the current non-current classification approach as the main approach, but nevertheless allowing an entity the flexibility to apply a different approach based on jurisdictional and user needs consideration. That's it from the CAG. Thank you.
Thanks very much, Fabian. I thought it was a very good discussion, actually very interesting to see some of the resonances and where people are coming from on that. So I think at that point in time, open up for discussion among the board in terms of views on the proposed approach. Kimera.
Thanks, Chair, and thanks, Anthony, for the presentation. I would like to know more about what would be the reason to include the financial, non-financial approach, because it's not coming from IFRS 18, so we should first be able to, what is the public sector specific reason to depart I know you explained it's not a full alignment project with IFRS 18, but in this case, if we are going to include an additional approach, which will, of course, hamper comparability, we will need to have really good reasons why. Why would it be useful considering what we already have in our standards in terms of financial instruments? There are a lot of disclosures already, or if we could even consider having as a main approach the current, non-current, and then as an additional, if they would like to have it, so this financial, non-financial approach to be aligned with GFS or something. So, but always to have a main one that is mandatory, and then they have the option to have all the others that they would like, but at least to ensure comparability. Thanks.
Thanks, Camira. I mean, that's where actually Antonella Risi did a very good presentation, because the financial, non-financial is where the Canadians ended up, and it actually tied in a lot with sort of issues about operational capacity, maintenance, and so on. So I think, that actually probably, if Anthony, if you can share that presentation, I think that, it did open up, I think, a number of the sort of reasons why you might go for that approach. But equally, I think one of the other things that came out was the sort of, the points about, if it's not broken, then, so that was one of the, it was a good discussion, actually. I'm not sure which order the flags went up in, actually. I think, was it Claudia first or was it Scott first? I'm not sure. Okay, Scott, to you. And then I'll go to Claudia, Mari, and Lynn.
Yeah, thank you. I will admit, when I came into the meeting, I was probably in the camp of providing flexibility, but what really kind of swayed me was the CAG. And I think it ties a lot back to even what Nick said. And that is, we need to keep in mind the user for the financial statements. And we have users of the financial statements that are used to seeing things in a certain way. And there's certain complexity with the other format. And we have to keep in mind the ability for our users to be able to interpret that nuance that's in there. And there may be other ways to present that nuance other than on the face of the statement. So I think we need to figure out how to get to the and instead of the or here. But I think what I heard clearly from Nick, and I think that's what the caution was coming back from the CAG, is we need to keep the user here ultimately in mind, and keep in mind what particularly the citizens' view about what they're going to be able to interpret in that area. So that's what I think the CAG presentation is very strong in that, and really kind of changed my view.
Okay, thanks, Scott. So Claudia, to you next.
Thank you. I will add something, what Camira said about if you need to describe financial, non-financial approach in our standard. For example, for the asset side, I would prefer something like held for operational capacity versus held for financial capacity. Then where it's the basis for defining financial, non-financial, I heard what the Canadian explained, how they defined it. That seems quite okay. We have said something we want to base on the financial instrument standard, which might be a foundation, but we have some weaknesses because financial instruments only dealing with contractual agreements. And there's one challenge, I would say, to get the definition right. Then we followed the explanation from our colleague from the ISB. He explained it was hard to get a confirmed definition of unusual, usual items. So I expect if we open the door and say, okay, we want to get financial, non-financial approach as a second version from our statement, then we need a definition what it's aligned worldwide, and we have really to think about if it's worth to invest the time from our resources to define this, or be more modern, that the flexible and say that's the core standard, it's current, non-current. approach. If you have your own jurisdiction, something different required, like Camilla said, then maybe it's allowed to divide into instead of give two options, really.
Thanks, Claudia. Ross, you just wanted to come in before I go to Murray?
It's specifically on the financial, non-financial approach in the Canadian presentation, because I also found that very interesting. But if we go the route of the Canadians, I think we need to keep in mind a couple of points. So traditionally in Canada, the reporting model has always had a reconciliation to net debt on their statement of financial performance. So they've always valued that link between the financial aspects. And just to remember that they have very different financial instrument standards and very different definitions. So I think we'd really have to study a little bit more their definitions and how they've driven it, because it's more intention based on how you're going to settle a liability and with what assets you will. And I think, as you've noted, because of our definitions being different, that wouldn't quite work as is. So we'd have to look at it from the definitions we have and whether that would work in the same way it worked for them. I'm not saying not to do it. I just want to flag that as a really important issue, because I don't think we want this project to drive us opening up our financial instruments definitions for a presentation approach. So I think it's important that this project is on presentation, not opening up definitions. So we need to look at what we have in our guidance.
Thanks, Ross. So Mary, then Lynn, then Liang. Oh, and then Yakuba.
Thank you. Financial and non-financial approach is important under consideration of the fiscal situation of in individual jurisdictions, and current and non-current approach is also important from my point of view. However, another point, in light of the very important agenda to strengthen the public financial management, and it is so important, the comparability, and so how to include such kind of important message in the IPSAS in the statement. It's my point of view. Thank you.
Thanks, Mary. Lynn, to you next, and then Liang, and then I'll go to Dave.
Thanks. I wanted to build on some of the points already made. Firstly, I agree with Camilla. I think we should have a preferred approach. When we have something is either or, then we are implicitly saying that they are of equal value. And I have various reasons why I think one is more useful than the other. And I do think it's helpful for the board to land on a preferred approach with a and rather than an or. Couple of other observations. So I guess my favorite approach is to keep current non-current. Why is that? I think firstly, what does occur to me is an argument that's not made in the papers is around, that comparability to the private sector. 40% of the bond market is government bonds. So actually, that sort of comparability is really, really useful. And I think we shouldn't lose sight of that. I think you've heard from others around some of the challenges of definitions. If we go for financial, non-financial, I think I've already heard around this table and these interventions, two different ways to think about non-financial and financial. Is that held for operating capacity versus held for financial capacity? Is that a financial instruments definition that financial has to have a counterparty? There are very many different ways of looking at that. And there is also, to my mind, a danger of confusion that however we may land financial, non-financial, we're not going to land that to be consistent with GFS. So actually that gives us another problem where users may perceive us to be consistent with statistics when we won't be. So I think there are quite a few dangers in us trying ever to land a definition of financial, non-financial. And I think Claudia made the point that could take us a long time, and we may never get to something that's satisfactory. So I think, to my mind, we should have a preferred approach. That preferred approach should be current, non-current, for the reasons that I've set out. But I'm not against us having an and. I think my final observation, we heard from Canada about the importance of net debt, but let's not, and a reconciliation to net debt, and a consideration around the fiscal position. But let's not pretend that the net debt figure is something that is consistently calculated jurisdiction by jurisdiction. So I think that actually, when we look at the fiscal position, I am in favour to have reconciliations to fiscal positions in jurisdictions, but I think that is an and position, not an either or. Thanks.
Thanks, Lynn. Liang, to you next.
Thank you, Chair. Actually, I share the same concern as Lynn. I fully understand the reason why we want to introduce a new approach as financial and non-financial. But to be frankly speaking, actually, in the past maybe 20 years of my technical work, one of the focus is the financial instrument accounting. Actually, I would say one of the most difficult one, or the most difficult controversial problem, is the scoping, to determine whether an item meets the definition of financial asset or financial liability, and then determine whether it scopes in the accounting standard for financial instrument. Previously, IAS 32, 39, and now IFRS 9. So, thinking actually the presentation of financial statement may be one of the fundamental issue for financial accounting. But when at the initial stage, or from the very beginning, we put it into a very, very controversial issue for financial reporting, I think it is not what we want intend to. So I would suggest that we keep the current non-current classification as a basic approach. If some entities, such as they want to present financial, non-financial, they can put it into the notes, or have such as a supplemental statement if they want, and if they have the capability to do the classification, I think it's welcome. But I do not think many entities or many stakeholders want to at the very beginning to have some very contribution issue, and or the presentation of the financial statement from the face of the statement that they cannot understand. Thank you.
Thanks, Liang. So I will carry on round in terms of taking comments. So I go to you, Kuba, next, and then Renee, Andrew, David, and Oyati. Kuba, to you.
Yeah, thank you, Jan. I tend to appreciate the proposal coming from CAG, but to decide on what approach will be preferable, I do think that maybe we need more information. Do we have data on the approach that is broadly used in the world? Because if we look at what we are doing right now, there is an alignment approach with IFRS, but we also are bringing financial or non-financial based on GFS. And I know that when it comes to developing countries, we know some of those countries are not using IPSAS. But if we bring into an approach that is nearby what they are doing currently, I do think that can help in adopting and implementing IPSAS as well. So to me, if we have more information in what approach is broadly used in the world, that can assist in choosing what will be the preferred approach, and then what will be optional for the others. Because we have two approaches right now, but we need a preferred approach and then the other as optional. So for deciding on this, can we have more data on what is globally used in that domain? Thank you very much.
Thanks, Gilbert. So go to Renee and then Andrew after that.
Yes, thank you, Chair. I came in this issue reading the paper, thinking that also, as opposed to a choice, having a preferred approach. I know that we talk about comparability within the jurisdictions, user needs at the jurisdictional level. I agree with it, but I also value comparability at the global level. That's why I think at this point I probably slightly lean towards having more of a preferred approach, but allowing the flexibility of the other approaches. On financial, non-financial, I think that there's compelling evidence that it's a useful approach in the public sector. I don't necessarily think it's more useful than current non-current, so I'm not posing a judgment or expressing a view on which would be the preferred one. I think that my first view is we should try to strive for a preferred one. But I think that the financial, non-financial is sufficiently compelling that I don't think we should just abandon it. And I think we should make an effort to try to define what it would look like. And I think the paper and staff have already started in that direction, according to the paper that was presented to us. I would lean towards something that is more in line with financial capacity and operational capacity, which we have in our framework, conceptual framework. I agree that it would likely depart from GFS. It would not line up with financial instrument definition for sure. But again, we're talking about financial statement presentation to meet a user's need about understanding the affordability, fiscal affordability of an entity. So I think it's a different angle than contractual financial instruments. So I would not expect that these definitions would align. So I'm going to stop here. So I think I go for a preferred approach. I'm more leaning towards that, not necessarily picking one at this point, but I do think we should be developing the financial, non-financial approach as at least an option.
Thanks, Renee. So go to Andrew next, then David, then Noryati.
Thanks. I guess I came into the meeting sort of seeing the potential benefits of a financial, non-financial, and allowing some form of flexibility. I think, as Yakuba, for example, said, it could be easier for entities, and I could see different levels of government, using perhaps a non-current, financial, non-financial. I guess having gone through the meeting, listening to the earlier presentation from Nick and discussions with others, I do wonder whether this is our unusual item, as Claudia said earlier, in that we're going to, I think, spend a lot of time trying to define financial, non-financial, potentially go out for comment. People are going to say, yes, great idea, but actually this is the definition we prefer and what we would like to implement. And I wonder then, is it actually going to be useful at the end of the day? Because we're going to we'll have to eventually agree on definition, whatever that may be, draw a line in the sand. And if entities don't agree with that definition, they are going to then potentially alter that in their jurisdiction. You no longer can claim full compliance with IPSAS then. You're not using our definitions, for example. And I think that does also then lead to potential confusion in the market, in that if people then do start to say, well, we do comply with IPSAS, but we don't use your definition of financial, non-financial, well, what's actually going on here? And that split does become, I think, a little bit more arbitrary. So I do agree, or like Liang's suggestion, I think that this is more trying to get to a net debt sort of a number. And so when we get to the section around alternative, what you can present in the note, management performance measures, something like that, maybe put something in there. Let entities come up with their own definition or jurisdiction, but there should be some consistency, defined criteria, etc., as we go through with it, but not necessarily then, prescribe that or allow that even as an option on the face of the balance sheet.
Thank you, Andrew. Now I've got three flags up. David Noyati and Angela. Russ also wants to come in. What I'd like to do is just allow time for the other comments to come in. I think so far, listening to the conversation, I'm hearing certainly very strong support for the primary approach being current, non-current. I think some differences of view as to whether that is the approach that we would mandate, or whether we would allow the alternative. I think probably at the moment I'm hearing more of a majority in favour of actually we should mandate current, non-current. But so what I want to do is just actually finish off on the round of interventions, and then I'd just like to go for a show of hands at that point in time to see where the board is in terms of whether we should mandate and then allow additional information to be prepared, or whether we allow an alternative. I think to allow time, and we are due a break. We'll break now, back here at 11 Toronto time, and then we'll carry on with those remaining interventions. So it would be David to kick off after the break. Okay, thank you. Okay. So clearly people have been thinking whilst they've had coffee, because I can see more flags have gone up. And good that you've come back promptly, because I think David would be very annoyed if he didn't have a good audience for his intervention. David, to you.
Thanks, Ian. I just wanted to pick up on various comments that have already been made. Starting probably with Anthony's comment at the start, when, as far as he's heard, there are no problems with the existing statement of financial position. So thinking about Angela's comment about, well, we need to ask the question that we're trying to answer, would suggest to me that we do not need to change from the current approach of using current, non-current presentation. I can understand why people are attracted to the financial, non-financial information. But again, as various members have noted, I mean, the definitions are completely different between different jurisdictions. They result in different figures. So I think I would support sticking with what we've got, but allowing a financial, non-financial presentation in the notes. I mean, nowhere else it would have to be in the notes, I think. Thank you.
Thanks, David. So that's the "and" option. Just before I go to Noyati, Ross, you want to just bring in a point about what drove the decisions in Canada?
Yeah, so I think it was prompted by Andrew's comments and Lynn's comments about using the notes, because the fact that jurisdictions are going to do things differently. And again, I think the reason the Canadians have always had a preference for the net debt reconciliation is because in many jurisdictions in Canada, there's balanced budget legislation. So that's a really important metric for them. So I just think it's kind of in line with David's point. I think I like the idea of the notes. It allows the jurisdiction to reconcile to whatever metric is important to them, but you still have a standard presentation in the statements themselves.
Thanks for that context, Ross. So I'll go to Noyati, then Angela.
Yes, actually, I agree with David's views. The thing is, when we are in the government's level, the first thing that we have to know is about our fiscal, our performance of our fiscal. That's the main point. They are actually, we are looking at the balance sheet as well, but the thing is, end of the product is what is our fiscal status. So I think one option is to put it in the notes, yes, and because we have to calculate our debt, actually debt to GDP or net debt, something like that, because it's meant for the economic purposes, and beside that, I think moving forward, we need to explore what is the advantage of having the based on financial and non-financial as well. Thank you.
Thanks, Noyati. Angela. And then I'll go to Lysvi and Patricia after that.
Thanks, Ian. And I agree with many members around not allowing financial, non-financial. I just wanted to add another reason is under IFRS 18, if we follow that, there is the case to make for the liquidity approach if current, non-current, if it's considered liquidity is a better presentation. And I know in our jurisdiction, we take advantage of that at the whole of government level, where there's significant treasury, debt and investment functions, which is a huge part of our balance sheet. So at a department and an agency level, most of them use current, non-current, but we make the case that liquidity is a better presentation. And in some ways, the question is, gosh, is financial, non-financial just the liquidity approach with some subtotals? I don't know the answer to that, but the not having to go there means that we don't have to additionally explain what's the difference between financial, non-financial approach and the liquidity approach, when at a high level, most lay people would think, isn't that just the same thing? So that will avoid that reconciliation as well. But I can see using the liquidity approach, which is a really nice simple approach actually. You can then use supplementary fiscal reconciliations to your fiscal position or your key fiscal indicators. I suppose one well, not warning, but one thing we should be clear about, and I think we're getting clarity on, is that if we thought net debt or some kind of fiscal position aggregate was important to get consistency across the global sort of reach, there becomes a question of when is that in the financial statements in accordance with GAAP and when are they in the commentary or outside. And I think I'm getting a sense that they're outside of the financial statements. And I think that's the main question we may need to ask in the balance sheet is, similar to the IASB had a focus on non-GAAP measures in the performance statement, and I know we'll get there, Anthony, but do we have a problem on the balance sheet side where we do want to get some kind of non-GAAP balance sheet measure, whether it's net worth or net debt? So, but I'm not sensing that's a problem we're looking to solve.
Thanks, Angela. Anthony, you just want to come in on the net debt point?
I'm just quickly noting that's the next agenda item.
Right, okay. So I'll go to Lucy next and then Patricia.
Thank you, Chair. I prefer the retention of the current and non-current approach because I think this is more useful for most public sector entities, which main function is really to deliver services. And in doing so, I think especially for a particular operating cycle, then it is more useful for them to have information on the availability of their net assets or their working capital in continuing to deliver the services. Rather, part of course from the determination of their assets that would support their long-term operations. And also, I think we should not. We should always remember that the accounting is linked to budgeting. Budget for annual budgeting process of the legislators would really look at the available assets or the liabilities that have to be settled for a particular period in appropriating funds for the entities. So they consider the statement of financial position in the appropriation of funds. So they look at the current and non-current presentation of the in the statement of financial position is, I think it is very useful for not only for an accounting perspective, but also for budgeting perspective. In addition, our existing project of aligning our IPSAS 1 to IFRS 18, I think would already pose operational challenges for the entities, because I think there's a need for entities to revisit their chart of accounts, their information system, their accounting system, and they would calibrate this system so that they would be compliant with the new IPSAS. So if we will shift from the existing aggregation or disaggregation of assets from current and non-current to financial and non-financial, I think it might be difficult for them to comply with the or with adopt the new IPSAS 1 if we will follow the transition the effectivity date of 1 January 2027 of IFRS 18. So I think we also have to consider this. And I think there are already IPSAS 30, for instance, that would provide or that require entities also present their financial instruments according to order of liquidity and solvency. So I think we can perhaps think of if there is a need for us for additional guidance as part of other amendments, if we want to have some more disclosures about financial and non-financial, using the financial and non-financial approach for financial instruments. Thank you.
Okay, thanks, Lucy. Patricia?
Thank you. My question is, if it's, I think it's a good indicator, the net debt, but I'm not sure if I need to change the structure of the balance sheet to have this indicator. Because if I have a definition aligned with the financial instruments, and I have the elements, the items in the balance sheet, I can calculate this indicator. However, in the example here, there is investment with financial assets. Then I'm not sure about this. It's a very complex area as the presentation today. In sum, I can't decide about because I don't know what is financial and non-financial. I need to have some idea about what is financial and non-financial to decide if it's better to have a balance sheet with this classification, if it's better in it's a note that the entity should present, or if it's a part of the RPG1. I don't know. I need to me more information to decide about this. Because this I because I can decide if I allowed or not allowed. So thank you.
Okay, thanks, Patricia. I mean, I think that's a very good summary of all the issues that we would need to actually consider if we did actually start to develop the financial, non-financial approach. So, I mean, I think, you know, it's actually been a very good discussion. I think a lot of good points put in by board members, and I think that very much builds off a very good ag session as well. And it shows how the interaction can work between the two groups. So what we need to do is work out, well, what should our preliminary view be in the consultation paper? And I think there's no doubt this is an important area, and we will need to set out our thinking around the issues that have have been exposed during the board discussion. We do need to come to, well, what will our preliminary view be? So what I'd like to do now is just test where the board is, and respecting what you say, Patricia, but I think at this stage the question really is, do we mandate the current non-current presentation with the ability to add note disclosure, for example, on financial, non-financial, or to reconcile to net debt, or do we allow a choice between current, non-current, and financial, non-financial? Recognizing the work that would need to go in if we do actually allow that as an option. I think that's reasonably clear what the choice is. So if we could have a show of hands for option 1, which is mandate current, non-current presentation with the ability to provide supplementary information in the notes. So that's the and option, versus option 2, which would be to allow a choice between current, non-current, and financial, non-financial. So if I can ask for a show of hands of those who would support going with option 1, mandating current, non-current.
17.4.
Okay, those who would support option 2, allowing a choice between current, non-current, financial, non-financial approach.
1.
Okay, so I think that's a fairly convincing, majority of the board in terms of what we put in the preliminary view. Now, obviously, our stakeholders will come back, and that's the advantage of giving a clear preliminary view in the CP. And I think that would address Yakuba's point in terms of if we do hear a strong groundswell in terms of, the alternative approach, that's fine. That's why we have a consultation paper. And we will need to think a bit more about what we say, and what we might provide in terms of how you might address that jurisdiction specific, additional information, whether that's just an option there or whether we provide any guidance on that. That's, I think, something to come back to. But we will see the draft CP section with the write-up with coming to that preliminary view in September, and similarly that material will appear in the illustrative ED that we see in September. Renee.
Yes, thank you, Chair. I just want to clarify the implication of this decision too on are we going to go ahead and do work on financial, non-financial? What's the implication for that option? I'm not clear at this point where we're going with it.
Dave, do you want to input on?
I had a question to the board, but the implication, Ian, is that no, we will not take financial, non-financial forward.
I think we will articulate in the CP what the approach would be and what it would involve, because that's part of the discussion and the debate. But we won't take that forward in terms of the detail of the work, which would be involved in defining and all of that kind of thing. So the argumentation will appear in the CP, but we won't do more than that at this point in time. And the illustrative ED will be consistent with a single mandated approach in terms of current, non-current. Okay. Good. Thanks, everyone. I think that's been a very good discussion. So, sorry, Dave.
Sorry, just for the purposes of drafting the decision, and Anthony, I hope I'm not getting ahead of us here, but in mandating the current, non-current approach, are we removing the ability to use the liquidity approach as well?
I think that's the implication, yes. So if you wanted to provide information on liquidity, then that would be additional information by way of notes.
So Anthony, again, correct me if I'm wrong. I think that's a departure from IFRS 18. Okay.
Okay.
Good, Angela.
Angela.
Thanks, Ian. I'm not comfortable with departing from IFRS 18 on that if the case is to be made for a liquidity approach. When we did the vote, I thought we were really just focused on either or, but yeah, I don't think we discussed the liquidity approach. Like, I would prefer to go a pure IFRS 18 approach.
Well, I suppose let's revote in terms of who's in favour of going in with IFRS 18 or who's in favour of standard approach. David.
Well, I just would note that the liquidity approach is allowed under IPSAS 1, but it's on an exception basis. So I don't really see there's any reason why we shouldn't keep that. It's on an exception basis.
Well, I don't think we've actually really had the discussion, frankly, and I think probably we're going to have to come back on that one, because I think the arguments are different on that. Ross.
given that it's in IPSAS 1 and IFRS 18 now, so we might have people who are using that at the moment. If we were going to make the departure on that basis and take it away, I think we would need to articulate why we think it's not necessary. It's already in our guidance.
Yes, but I think we do need to have a think about that because, you know, I mean, we've had all the arguments about alternative presentations and so on. And I think, you know, there is a legitimate question, which is actually, do public sector entities really need this or not? So, you know, I think we do need to think about that, but I think it's a different discussion. I think we've looked at financial, non-financial, and I think it's fairly clear where we go. And I think then we have to actually decide whether we're going to remove that or not. But I think that's a separate discussion.
So I think for the purposes of the decision, we can say that between financial, non-financial, and current and non-current, we have decided to go with current, non-current as mandated, and we will come back and look at liquidity in September in the future.
Yeah. I mean, yeah, I think that's the only thing we can actually do on this. So I don't want to have more discussion on that. I think let's go on to the next issue.
Cool. We'll carry on to next agenda item, and board members have already touched on this, and this is agenda item 8.2.4 around the structure and the presentation of specific subtotals in the statement of financial position. And I guess it's easier to go straight to the recommendation from the task force, is that the task force looked at this and decided, consistent with IPSAS 1, consistent with IFRS 18, that we should not prescribe in a standard a specific structure, specific order, or specific format for presenting the statement of financial position. Entities can choose how best to do that. And we should also not define or require the display of any specific subtotals, remembering that IFRS 18 IPSAS 1 already allows for additional subtotals when useful, but we would not seek to standardize or define what those subtotals would be in an IPSAS standard. So open for comments on that.
Okay, thanks, Anthony. So any disagreement with the task force recommendations on that? Not seeing any flags up, so I think we're content with the task force recommendations on that.
Perfect.
So move us on.
So 8.2.5 is looking at the presentation of specific line items. So in the standard, there is a list of specific line items which are required to be displayed in the statement of financial position when material. So there will be additional guidance coming to future meetings on aggregation, disaggregation, materiality, and those principles. But we're just looking at those specific line items that are drawn out of the standard. And as a task force, again, we looked at that. We looked at the current requirements. We looked at IFRS 18, and they remain consistent, except for one change that IFRS 18 introduced, and that was goodwill. So we recommend aligning with IFRS 18 and having no other changes to that list of specific line items that are required to be displayed. I have had offline comments around what we're doing, what we'll do with natural resources. I suggest we take that away as staff and consider that as part of the natural resource project. But we've got that noted. But other than that, yeah, open for comments.
Okay, thanks. So any disagreement with the proposal from the task force? Abdullah?
No disagreement. Just I thought in IFRS 18 they included biological assets. I might be wrong, but we can check for that.
Claudia?
Yeah, thank you. maybe just to remind me why we haven't included transfer obligation liability and transfer right assets from the new revenue and transfer expense standard to the balance sheet line items. When we approved the standard, there might be a decision, but I can't remember what was it.
Yes, that was a specific issue that we considered as the task force, and there are requirements in there to present those line items and those individual standards, and we felt they would be read better within the context of those revenue and transfer expense standards, rather than pulling them into this presentation standard.
So this is the minimum presentation, but then you can actually add in if that's material. Ross?
It's also consistent with IFRS, where the related assets, liabilities in IFRS 15 are also not mandatory in IS1 and IFRS 18. So we're just consistent with that approach.
I mean, I think we would add that point, though, in basis for conclusions. That's the approach that we've taken. Abdullah, back in.
Yeah, another minor comment, which is we discussed within the team, is like, given the characteristics of the public sector, do we want to include a line item for deferred tax assets and liabilities?
Ross?
We don't have a standard on deferred taxes, so we can't make that a line item.
I mean, again, if you have, entities that actually are subject to taxation and that's material, then there's nothing that stops you pulling that in.
My point of saying that, because we are talking about presentation financial statements, this is where the point I was coming from. So, and yeah.
Sorry, I missed that.
I was saying this project is talking about presentation of an item financial statements. That's why I brought that thing, and looking into the characteristics of the public sector, I thought that would be a material item, the taxes. So that is why I brought that.
Ross?
Maybe let's have a chat offline to understand a little bit more, but I think the nature of tax accounting is, that's one of the IFRS standards we just outright said we're not picking up. So IS 12, we don't have any guidance on tax accounting, deferred assets, deferred tax assets, deferred tax liabilities. So it'd be quite odd if we had presentation line items talking about that. We don't have any guidance in the IPSASB.
Yeah, I mean, if you look at the dashboard, that's basically what it says. It's one of those not applicable ones. So, again, I don't mind including something in basis for conclusion that says that we've had that discussion. But I think you're right, Ross. It would be very odd to have that as a line item. Patricia?
So only to understand, because the receivable from taxes is one important element, and there is a specific because in the revenue, there is no standard for taxes, but there is a standard for revenues, and revenues without binder arrangement, and one of the most important receivables from public sector is this element. In Brazil, you separate because it's very specific in nature. It's very relevant because of this. We have separate. I think it's about this.
Ross?
So I think we don't want to relitigate the decisions on presentation and disclosure that we just had around May of last year when we finalized the standard. We didn't make that a requirement or a consequential amendment to IPSASB 1 then. That's consistent with the changes from IFRS 15 to the resulting presentation standards in IFRS. So we don't think we should be adding that as a line item now. we can maybe talk about that in the consultation paper. We do have guidance on presenting receivables, and in the financial instruments guidance, there's presentation requirements as well. So these are the items that you have to show on the minimum items you have to show on your presentation on financial statements. Not saying you can't have more. It's just saying these are, the minimum. If you have these transactions, every year you have to present them.
Anthony.
Yes, if it helps, paragraph 94 of IPSAS 1, which would be carried forward and is consistent with IFRS 18, requires specific additional disaggregation of receivables, which in the IPSAS standard does include taxes receivable. So we won't necessarily put it on the face. There'll be a choice of putting it on the face or the notes.
And I mean, this is going to be different between consolidated position, whole of government, and individual entities as well, because the majority by number in the public sector are not going to have that. It's going to be at the top level, and undoubtedly, I agree with you. At the top level, it is going to be material, but okay. And I think it might be useful. I think in crafting the basis for conclusions, I think we need to reflect the discussions that we've just had. Okay. So subject to those, we go back to the recommendation that we do include goodwill, but other than that, that's the proposal. Okay.
Thank you. Agenda item 8.2.6 was really considering to what extent do we include different illustrations, different formats for the statement of financial position and the implementation guidance. This will now change based on the decisions earlier around the different approaches. So probably will definitely include the current, non-current. The extent to which we include other approaches would be, well, financial, non-financial would be gone, and we can bring recommendations around the order of liquidity to next meeting. Was there any other pressing comments board members wanted to raise? Not really looking for editorials of what we've drafted, but anything of principle here.
Claudia?
Just a small remark. You have included in the appendix an illustrated example of the presentation statement of financial position, current, non-current. I find it quite detailed to get the principle right to understand. It looks like a little bit ruled. So it's a rule description which line items should be. If you could have it a little bit more flavor of getting the principle understandable instead of, that would be preferable.
Happy to look at that.
David?
I would support Claudia on that, actually, because in my experience, I've seen these formats from current IPSAS 1 just applied just like that as a rule. And if an entity hasn't got anything, say, against prepayments, it just puts naught. There's no thought given. And I think that the more that we can do to encourage the principled approach, then the better. So, I mean, if staff could think about that.
I think we probably do need to have an explicit statement that says exactly that, this is non-authoritative and does not require the presentation of these line items if they are zero, non-material, etc., to avoid any suggestion that they are authoritative and you have to present. Okay. So move us on to the next item.
With that, we've now completed the discussion on the issues around the statement of financial position. So we change into the next group of papers, which is looking at the development of the front-end sections of the illustrative exposure draft. As an opening comment, because we are tabling specific drafting, I appreciate and understand board members will have comments from an editorial perspective. You will also likely have comments from a wording preference perspective. I please encourage you to share them with staff offline, and we will take them to the task force and consider them further. But what we're really looking forward for in these agenda papers coming forward is whether you've got any concerns at a principles level, whether you disagree with the direction of the drafting, any significant concerns. Just another couple of opening comments on the approach that you've got in the analysis, and that we have tracked the changes in contrast to IFRS 18. We've tracked them for analysis purposes. We'll most likely, when we issue the final document, have a clean version, but let's talk about that later. But at the moment, just this is for board analysis purposes and was very useful for the task force. Also, for your information, staff have definitely got the same analysis, but fully marked up compared to IPSAS 1, and even with the reasons for all the changes. But again, for board purposes, not looking at two things, you've been given the analysis in contrast to IFRS 18. But you can take the confidence that we are doing the analysis from the other way, contrasting it to IPSAS 1 and marking up all those changes. And happy to share that with board members offline if that's something they really want.
And I think, in the way that we've just been discussing with the IPSAS 33 update, clearly we do need to provide, something like a table of concordance so that people can see where the changes have actually come from, together with perhaps, as we did with 33, just a brief note on the sort of change that's been made, whether it's editorial, substantive, or whatever. So I think that's, we need to work that up. And indeed, that's the way that the task force have been working, that we have that understanding of where a change is proposed from IPSAS 1. But we're not working with both sets of markup at the same point in time, even although that is being done by staff. Okay.
Yep. So you would have noted, have provided in the table, the papers, the table of concordance. And so you've got that, if you want to follow that through to what's happening, compare it to IPSAS 1. Okay, we'll move on. So just before we get into the specific drafting of the section and receiving your comments, the task force did spend some time and paused on some key terminology used, and just making sure we're consistent and had an understanding of that terminology, which was highlighted in the agenda papers. I think I highlighted it in 8.2.8, but easier to highlight now up front. So the first item was the general purpose financial statements. That is absolutely and definitely the scope of the standard general purpose financial statements. And we discussed what the shorthand of that should be. Should we use the acronym GPFS? We settled on financial statements consistent with IPSAS 1, consistent with IFRS 18, consistent with other IPSAS standards. So we refer to it once, and then thereon we refer to financial statements. And then there was other terminology around, we focused on primary financial statements as a task force, whether we were comfortable using that term, being an IASB term, but not a term that exists currently in the IPSAS literature. But we felt that was a term that is used by our constituents and is understandable by our preparers, and was a useful shorthand. Any other shorthand ended up being quite long. But explaining clearly what it is, and I summarize it as everything excluding the notes. It's including all those statements. So we can get tripped up on this terminology, but when we refer to the primary financial statements, we're also using the terminology of describing it as information displayed on the face of. And that's distinguishing from information disclosed in the notes. So we're trying to be consistent with this terminology of displayed when we're talking about the primary financial statements, and disclosed when we're talking about the notes. And that is consistent with the IPSASB's conceptual framework. We based it on that and looked at that. And then just as the overview, when we talk about the financial statements and any information that can go in the financial statements, financial statements are the primary financial statements and the notes, that we use the word present. You present information when it could be We're not being specific around whether we're talking about the primary financial statements or the notes. So I know when we work through this as staff and the task force, when we work through it, takes a little bit to get your head around it. So we did pause on it, but once you get that consistency, we were comfortable with the approach.
Just pause and check for any comments on that, because as you say, it's important. It establishes the language we're going to use going forwards. Not seeing any flags raised, so I think we're comfortable with that typology.
Perfect. Okay, so working through the remainder of the agenda items, I'd suggest that we do effectively a page turn of those separate agenda items, which have got an appendix for each one that marks up the changes. So starting with the Appendix A of 8.2.8. Has anyone got any comments on the objective, which is one paragraph to set out the objective of the illustrative exposure draft? So this is a consistent approach with other recent IPSASs that we set out in a nice concise paragraph. What is the objective?
Any comments? Okay, not seeing any flags raised, so I think we're content with that.
Thank you. Let's skip one. Okay, and then the next one, it will be Appendix A of Agenda Item 8.2.9, and looking at the scope, which we have a few paragraphs there, based on IFRS 18 and carrying forward public sector specific paragraphs from IPSAS 1. So any comments from a substantive perspective on those scope paragraphs?
Abdullah.
Do we want to just add, consider any public specific that is not carried forward from IPSAS 1? If we highlight any specific public sector issues?
Sorry, where are you, Abdullah?
I'm saying we have two issues when the scope is to align with with the IFRS 18, carry forward public sector specific from IPSAS 1. I'm saying to add C, already consider any other public sector issues that not being in IPSAS 1.
Yeah, so if I'm understanding, we did consider if there was anything else we should add, but we didn't identify anything else that required clarity.
Mike and then Liang.
So thank you, Chair. This is on scope section para 8. I read the explanation by the task force. At the moment, I'm not convinced why we carry forwarded that paragraph on consolidation, because if we seek IFRS alignment, to my mind, at the moment, we can leave it out.
Okay, I'll take Liang's comments and then come back to you, Anthony.
I see paragraph 9, which comes from IFRS 18.7. I just wonder, I suppose that there is no such paragraph in previous IPSAS 1. I suppose there may be some reason why we do not put this in previously. My initial reading of this, which referred to mutual fund and or cooperating entities, such item may not apply to public sector. So maybe we need to explore further whether this paragraph apply to public sector. Thank you.
I mean, just taking the point on paragraph 9, I can see the point that you're making, Liang, and we don't have equity as a separate element in the conceptual framework. So from that point of view, I think it makes sense that we should actually eliminate it. So if members are content, then we knock proposed paragraph 9 out, and we explain that in basis of conclusions. So that's what we've done. And then if we go back to Mike's point on paragraph 8, and you were proposing deletion there.
Yeah, at the moment, due to the comment by task force or by staff, I have a feeling I'm not convinced about why we keep that.
Okay, Anthony.
Yes, I understand Mike's comment that this is was in IS 1, IFRS 18. It's being cut. So do we need it in our standard? It's there for completeness. I don't see any harm in including it, but do we need it as a?
Anybody going to fight for retention? No. Okay. So we eliminate both paragraphs, proposed paragraphs 8 and 9. Any other points then? Okay, good. Thank you.
Thank you. Point 2.10, we're bringing in a number of new definitions based on the work done by the ISB in developing IFRS 18. These definitions have mainly been introduced for clarity of new principles and clarity in scope of requirements. So I think the easiest way will be to just go through each definition and check if there's comments. So if you're working through Appendix A of 8.2.10, was there any comments on the definition accrual basis, which is brought forward from IPSASB 1?
Not seeing any flags raised on that.
Okay. Then I'll take together any comments on aggregation or, yeah, sorry, still in order. Any comments on aggregation?
Well, I mean, those are three. There are three new definitions we've included there: aggregation, classification, disaggregation. So if we just take those three together, any comments on bringing those in? Not seeing any flags raised, so I think we're okay with that. Then we go on to the new definitions: disclosed information and displayed information, which come in from the conceptual framework. Okay. Economic entity, which is no change. Then we have the proposed new definitions for general purpose financial reports and general purpose financial statements. So I think we're fine with those. We have impracticable, which is no change. Then moving down, notes, we have an amended definition. Primary financial statements, new definition, consistent with the slide that Anthony showed. David.
I've just noticed we've used the term operating profit or loss. I didn't think we used that term in our standards. We tended to talk about deficit or surplus.
Is that in the drafting then?
Yeah, it's the first item on page 6 of item 8.2.10.
Yeah, sorry. So that's the definition that IFRS 18 is used.
Yeah.
We haven't changed it yet. That's to be considered at a future meeting, and we will not use that term.
Okay. Patricia, sorry, which one were you on?
Prior financial statement.
Yep.
The list, yeah. Yes, in the item E, the criteria for present the comparison, I think it's not there, that budget information. The criteria to present budget information, comparison in the statements, and there is not all entities are obligated to present, no?
So are you saying there's an inconsistency with IPSAS 24 then?
Yeah.
Okay. Can you take that one away, Anthony, and have a look at that?
Yep, we'll work on that.
Okay. And then the final decision that we have, the final definition that we have here is useful structured summary, which is a new definition. Not seeing any flags raised, so I think we're good with that.
Thank you.
Okay, so 2 points there to just attend to. Okay, so move us on then.
Then we move to the purpose of the financial statements, agenda item 8.2.11. So we've got paragraph 19 and a couple of other additional paragraphs carried forward from IPSAS 1. Open up for any board comments.
Okay, so here we're on page 71. So that's item 8.2.11. Okay. So I think we're fine with that.
Thank you. Then we're into the responsibility for. Did I?
I think it's just the numbering at the top that's gone wrong on the slide, actually.
Yeah. Yep. Sorry. Okay. The responsibility of financial statements, and this is a couple of paragraphs of guidance that exists in IPSAS 1, which we considered one, is it still relevant? Is it still appropriate to include it in IPSAS? And then the task force considered and felt that it would be appropriate to move to IPSAS 14, but still retain it in implementation guidance. So I have heard some comments from board members around retaining these paragraphs. So open to any comments.
Mike?
Yes, thank you, Chair. It's a little bit that issue on consolidation. I agree on removing it that out of the presentation. ED, but nevertheless, I don't think that we need it in IPSAS 14, because I think everything what's necessary there, it's been in that IPSAS 14, and therefore I think we can remove it. IPSAS 14 work quite well without having those two paras, and I think in order to streamline our standards, we don't need to recover that.
Okay. Other thoughts on this? Camilla?
Thanks. I would rather prefer to leave it in IPSAS 1 and not include it in IPSAS 14.
Okay, so I think that from those members that have spoken, I'm hearing we retain and just move forward the existing IPSAS 1 requirement. I think there's then a question to Mike's point about do we, at the moment we've got it in two places. I assume it's consistent between the two.
It's currently only in IPSAS 1.
Oh, it's sorry, I misunderstood that. So it isn't in 14 at the moment. Okay, so you're proposing to move it. Yeah. Right, okay. So it sounds like members are happy to carry it forward in the replacement for IPSAS 1 then. Okay.
Okay. Right, I worked out what threw me before. The slide, the title header should be the primary financial statements and the notes. So agenda item 8.2.13, it's the right agenda item. IFRS 18 introduced quite a bit of additional guidance on the location of information between whether you put it in the primary financial statements or whether you put it in the notes. The task force has looked at this additional guidance and felt that it was equally applicable to public sector entities. So we've used it other than changing terminology. So if you look at Appendix A of 8.2.13, any comments from the board?
Okay. Yeah, Claudia.
Thank you. I'm wondering if you have a look in the conceptual framework, if it's in line, our definitions, especially one, it's something displayed in the primary financial statement, or not, it seems something to do with materiality. So I'm not sure if it could be then not only use the wording from IFRS 13, we have also to make sure that's on our conceptual framework in line. As we have, I assume, different definition.
Yeah, so we've specifically sought to align it with the IPSASB conceptual framework, which has resulted in us using slightly different terms than IFRS 18. So IFRS 18 talks about present on the primary financial statements. IPSAS conceptual framework uses the word display, and IFRS 18 talks about disclosure in the notes, and the IPSASB conceptual framework talks about disclosure in the notes. So we have got to change there to align with our conceptual framework and using the word display.
Okay, thanks for that clarification. Mira, are you in on this one? Yep, go ahead.
Yes, I mean this agenda item. I have a comment on the section information displayed in the primary financial statements. Yes, I have a general concern. I know the text is aligned with IFRS 18, but the way it is presented, it's somehow reducing the importance of the principles in the standard, because it's opening the door to say, like, well, if we have even if we are requiring all to present all these line items, the entity can just do not need to present those if there is no, it's not providing a useful structured summary. So it's different from what we have seen in the IPSAS literature so far when we are talking about, okay, if it's not material, or if the cost benefits the costs are not justifying but here we are talking about something new for us that is, okay, useful structured summary. I know that we are including a new definition for that, but it's really subjective, and we are giving like a strong prominence to this, like even if it is not necessary to present it, even if the line item is required by IPSAS. So it's like even if it's there, you don't need to present it if you consider it's not useful. But what is useful? So there is a definition, but it's too subjective. I think if we can somehow manage it, I don't know, require something else, like, okay, if you don't present it, then explain or give your reasons why you consider it's not useful, but it's too subjective. So if we can somehow bypass, as a not include that one, would be better, because still we have, yeah, that's why it's a requirement in our standards. So thanks.
Anthony, back on that.
You're touching on core principle of IFRS 18, where the IASB spent significant time on this new concept of providing information and summarized in the primary financial statements. Absolutely, you need to provide information if it's material, and if it's material, then you need to decide: are you going to disclose it in the primary financial statements or in the notes? That is a professional judgment. So it's, yeah, I can't see a public sector reason to depart from where IASB has ended up, and I haven't seen an inconsistency with our conceptual framework in that regard. So we can look at it, but the IASB spent years on this, and it's whether we've got a reason to open it up
I mean, from that point of view, I guess it would be useful just to have a look at the explanatory material that the ISB provided with this and just see how that fits with our context. Andrew, are you in on this?
I was
Go
just
ahead.
going to say there are a bunch of AGs that are supposed to support this, but we don't have as of yet. So Kimira, maybe when you see the AGs, it might address your concern.
Thank you, Andrew.
Okay, thanks, Andrew. So I think we hold that point, and the instruction then is explicitly to come back to it when we get to the AGs. Thanks for that. Lucy.
This might be a belated comment on the use of display instead of. I'm just trying to link this with the audit opinion, where the auditors are expressing opinion on the fair presentation. So would it now trigger the change of fair display, or I don't know. So
I think we're using the overall term presentation. So I think that links with that. And presentation comprises both display on the face and notes. So it's only, I don't think that impacts on the audit opinion. Ross.
Yeah, I would agree. I think we're just using our terminology. I don't think this changes what we consider fair presentation in IPSAS.
I mean, in any case, this is a financial reporting standard. It's not an auditing standard. But I can't see that introduces an inconsistency.
Yeah. IPSAS 1 will still have the requirement to present your financial statements in accordance with IPSAS. Still have that terminology there.
Okay. Ross?
I do think we'll just need to be clear that we've adapted what's in IFRS 18 to be consistent with our conceptual framework, to Claudia's earlier point when we were talking about the slight difference in terminology in this paragraph versus IFRS 18.
Yeah. Okay. So we need to clarify that the point raised by Kimira when we get to consideration of the AG material. Any other points from board members? Okay. So that's everything. So I think, thank you very much, board members. I think that, that's covered quite a lot of material, but I think it also shows the power of using the illustrative exposure draft. And we certainly will need to write up the balance sheet discussion for the consultation paper. We will need to see another paper back then on the question of whether we maintain the approach in terms of the alternative in terms of the order of liquidity, or whether we align, whether we remove that and or propose removal, and just adopting the single approach. Okay, so we are ahead of schedule at this point in time, but lunch is available, I think. So what I propose is that we break for lunch at this point, rather than start on natural resources. So we return at 1:05 Toronto time to start the item on natural resources. Okay, welcome back, everyone. So we move on now to natural resources. And Edwin, over to you.
Thanks, Ian. So we have two major papers on the agenda today, but before I get to that, I would like to talk about where we are in the project. So this is just a timeline of where things are sitting now. If you recall back in March, we essentially decided on all the key principles that will be in the exposure draft, which I've listed on the slide. So what's really left at this meeting is looking at the non-authoritative text and also looking at the drafting that was done to incorporate the principles that we've decided upon. So on Monday, we actually talked to the CAG about the implementation guidance and the illustrative examples. So I'll turn over to Fabienne after talking about the next steps. But where we plan to go is pending the board's discussion of the topics for the IGs and the IEs. Our plan is to review the actual drafting of these examples and guidance by exception in September. And then assuming all that goes well, we will have a vote to approve the ED at the September meeting, sorry. And then if the ED is approved, then in most likely mid to late October, we will release the exposure draft along with the usual at a glance materials. Okay. So before I get into the actual technical papers, I'll turn over to Fabienne for the summary from the CAG.
Just before going to Fabienne, seeing Renee online. Renee, anything else you wanted to add just as task force chair? So.
Yeah, no, not at this point. I think that's complete. In terms of the management, though, of the project, I think that the paper referred to us bringing the IEs and IGs at the check-in meeting in July, but we'll do that in September. Edwin, I'm not sure if you mentioned that, but that to me is a change compared to what we have in the paper.
Yeah, I think logistically that wasn't going to work, was it, Renee, in terms of just being able to get the task force to work through that. And I think from the board point of view, as we've done previously, that work by the task force outside in terms of reviewing the drafts and making sure they're in good shape has been very important for the board. So in discussion with Renee and I, we agreed that would be we could handle that in September, and we'll make sure that there is some time out during the meeting just to sort of finalise any bits of drafting. But as they're non-authoritative, we agreed that was appropriate. Okay, Fabienne, over to you. Thanks, Renee.
Thank you, Jan. So for the CAG members generally supported the implementation guidance and the illustrative examples presented. They also suggested organizing examples so as to focus on what's in the scope, adding implementation guidance on conservation, as it is a key part of the proposed guidance in the exposure draft, addressing the potential overlap between heritage assets and certain natural resources held for conservation, and explaining terminology such as primary intended use for those resources with multiple uses, readily quantifiable with respect to subsoil resources, and human activity with regards to conservation. And lastly, adding guidance on separating resources that can be considered multiple assets, for instance, separating land and forest or land and water that can be sold, for instance. That's it from the CAG.
Thanks, Fabienne. So, Edwin, over to you.
Thanks. So I'll walk through the first paper now. And before I get into the actual details in the appendix, this slide just summarizes the approach that we took when the board developed revenue and transfer expenses. And essentially, there's a cascade in how we're developing guidance. We start off with the core principles in the core text. And then we think about, well, do we need some guidance in terms of how these principles are to be applied? And that's in the form of application guidance. So that's also authoritative. And if we decide that the authoritative text needs more implementation help or implementation guidance to help constituents apply these in practice, then we would first move to implementation guidance. And that's really a narrative type of guidance and usually set up as a Q&A. And normally we consider challenges that are very widespread in the public sector. Okay. And finally, we move to illustrative examples. And those are in cases where even after the IGs have been developed, we still have some issues that we want to work through in terms of the mechanics of the principles. So a lot of times the IEs will actually be numerical in nature. And the other thing to keep in mind is that the IEs are meant to be simple. So they're not meant to, be a cradle to grave walkthrough of an entire accounting cycle. It's really just illustrating a very narrow principle. And because of that, the expectation is that we would not have a lot of illustrative examples. Most of the non-authoritative text that we are proposing is actually IGs. And as you can see in the appendix to the paper, essentially almost every single topic that we have thought of has an IG instead of an IE. The only exception to this is when we talk about transition, in terms of applying the guidance or the course text that we have agreed upon. For transition, it's more so working through the mechanics and seeing numerically how it works. So that's why there is no implementation guidance for that, and we're jumping straight to the IE. So for the purposes of this, this session, I wasn't going to walk through every single example, but I would like to quickly flip through them with the board to see if anyone has any examples or any comments on the implementation guidance or the examples. And then at the end, I would like to ask if any board members have additional topics that we should consider.
Okay, so if we just walk through page by page, I think is the easiest thing, isn't it? So if you just want to lead us through, Edwin, and we'll pick up member comments as we go.
Okay, so the first page that has substantive items is on page 5, so IG1, which is on the determination of whether a tangible natural resource is within the scope of the ED. And with that IG, we actually have 2 examples right now. So, and I should mention that I have received editorial comments from a lot of members already. So if anyone has more, then please feel free to send them to me. Okay. Nothing on that topic. So the next topic is on the identification of potential natural resources, and that's IG2.
Yeah, Andrew.
Thanks. Just in B of IG2, the last sentence there refers to make use of or sell naturally occurring items. I guess those wouldn't be natural resources within the scope of this ED. They would be sitting in inventory, PPE, etc. So if we can rather delete make use of or sell.
Okay.
Okay. Marek?
Yes, I have the same thought with Andrew. And so in Japan, the Japanese National Forestry, its purpose to own is the public interest. And so I have so uncomfortable to the wording, the sell natural occurring items. And so there is so confusing. I am still in confusing about the natural resource and the natural resource asset. And asset is so the presumed in this statement. And so it's my confusion. Thank you.
Edwin?
So I guess I'll explain where this IG came from. So when we came up with the CP, a lot of constituents wrote in and they were asking, well, does this mean we have to look at every single puddle on the ground and every single stream in our jurisdiction and consider if those were natural resources? And what this is trying to get at is, well, no, like you don't have to go through a whole laundry list. All you have to do is think about what programs you have in place to potentially conserve these items, and then use that as a starting point to think about, okay, are these resources assets? And then you would apply the asset recognition criteria to that. So it's really a starting point for the analysis. Instead of saying, look for every single potential resource in the region you have or in your jurisdiction, you're just thinking about your actual programs right now and thinking about the resources that are covered by those programs and whether they can be recognized.
Does that help, Murray?
Yes, I think my confusion is from it is in the financial statements. And so the asset, the definition of asset, and the natural resource, the naturally occurring and is then included in the financial statement. And it's the significance of the natural asset itself should be considered in the framework of the financial statements. Maybe its positioning in the financial statement. It should be clarified, I think. Thank you.
Okay, I think I know what you mean, but so this example or this guidance is before something is recognized in the financial statement. So you're trying to determine if it should be recognized. Yeah, but for items that are already recognized, you wouldn't even have to do this analysis because it's already done. Yeah.
Okay, so in summing up on the drafting then, Edwin, I think make sure, and if you can cross-check with Mary that, you know, the drafting is clear from her perspective, I think that would be helpful. Renee, sorry, I missed you earlier. Did you want to come in or?
No, that's okay. I'm good. Thank you.
Right. Scott.
Yeah, I have a comment without an answer. So I've talked to Edwin about this. I was looking at this from an audit perspective, and one of the things you always have to be concerned is, can you create a population to audit? So I can't fix it, but I'm still not sure we've got the population drawn here right to help because you have to be able to prove you've got the population covered. So I'll be very interested in a response back on this from our constituents. I'm not sure I can fix it currently, but to see if this is enough guidance. But I think we need to be sensitive to this point, because how do you prove you've got all the programs out there that somehow deal with natural resources? So somehow you draw a boundary around it. So it is a concern I still have. I can't fix it, but I think we just be sensitive to it as we move forward.
Edwin.
Yeah, that's the exact reason why we came up with this in the first place. But
I'm not sure we fixed it, is all I'm saying. But let's see what our constituents tell us.
Yeah, I think that's probably the right thing to do on that. Okay.
Okay, so moving on, the determination of control is IG3. And just to clarify, we already noted that we're moving what was previously the IGs into here, but it's not just going to be a copy and paste. We're obviously going to reword and rewrite everything so it's in the Q&A format.
Okay, I think we're fine with that.
Okay, so moving on to page 8, the next IG4 is on the difficulties in recognition of subsoil resources. So as a reminder, we went out with the CP and we kind of left the door open in terms of recognizing unextracted subsoil resources. A lot of constituents wrote back and said they couldn't see how this is conceivably possible. And some constituents actually said, well, they don't see these as resources because you can't actually tell it's there. So that's the reason for this IG.
Okay, I think we're fine with that.
Okay, so the next item is IG5 on page 9, and that's on unit of account.
Okay, fine.
Okay, so conservation is covered in IG6, and this one is more just explaining what conservation actually means and what the typical activities would be.
Okay.
Okay, and the next IG is related. It's really subsequent expenditures incurred to conserve a natural resource. Okay, no comments.
Yeah.
So the next IG is IG8 on change in primary use. So I did receive a few comments asking whether this should be an example, but I think what we're trying to do is really conceptually talk about this issue rather than having numbers where you essentially just credit an item and then debit another asset. So it doesn't really make sense to have an example like that. And I thought an IG would be much better.
Sounds like, oh no, Andrew?
I hesitated whether to raise or not. All of these examples go the one direction. I guess it would be useful perhaps to have examples going the other direction as well. So out of a natural resource in the scope of this standard to one of the other asset standards, or from one of the asset standards in here. So to rather just mix the directions rather than having them all go in the same direction.
Since this is an IG, would you be happy if we talked about both directions? Because I don't think it has to be a separate. Okay. Yeah. Yeah. Okay.
Okay.
Okay. The next IG is on the determination of current value. Yeah, we just try to reemphasize how to determine COV and give some high-level thoughts on things to consider.
Camilla.
Thanks, Chair, and thanks, Edwin. I think here the example of the forest is not so clear in terms of the market approach. If we can change the example, it would be better. Thanks.
Patricia?
My suggestions align with the IPSAS measurement, IPSAS 46, because the no market approach is not a. Yeah, and here it's about the cost approach. In the B,
in B,
in essence, is cost approach.
Yeah.
Yes, thank you.
Yeah.
Okay, thanks, Patricia. Renee?
Yeah, I think in line with Camira's comment on A, so Edwin and I talked about some feedback that we got, and trying to expand that one. I mean, determining a market value based on the species of trees that are on the land could be one way of doing it, but I think that we've observed that in practice, appraisers could also be appraising the natural resource, like a forest, for example. Here, this is what we're using as an example, maybe using just appraisal values based on square footage or square miles. And so there's other way to get at a market value. So Edwin and I thought that we could add more flexibility, and I think it would address maybe Camira's point. Just wanted to bring this up here.
Okay. Yeah. Yeah. Well, I'll definitely work with Renee when we draft the actual examples to work that in. Yeah. Hey. Oh, Patricia.
Yes, I think you have a good discussion during the task force. And I think there are some different views about the use of, for example, the value to sell as a base for CUV. Maybe I think it can ask for the respondents make ISMC if he understand that it's a way to measure. Because there is some controversies in relation to, for example, measure a forest for conservation based on the value to sell. And because there is some restriction in terms of this, but I think it's good to listen respondents about this.
Yeah, we can work offline because my concern is that would essentially be asking them a question about IPSAS 46 rather than the ED, because then you're now asking them about applying COV in general. So.
I mean, it may be the example that's being used here is actually causing the problem. I don't know anyway. So I think that requires some more discussion offline and sort of, I think probably if you can work with Patricia, but also involve Renee in that as task force chair, and try and get that one sorted. Okay.
Okay. The next IG is IG 10 on when a current value is not reliably measured. And I did get a comment or a question asking, well, isn't what I wrote here the same as what's in measurement? And it is. Like, the intention is not just to copy and paste this text into the final standard. We are going to expand upon it. Okay. With that, we have an example. And this is an example of land where, because of its remote location, nobody can reliably measure it. So we've included that because of that, you would only provide disclosures. And as I'll get to soon, we have a separate issue on where to locate this. So I will come back to the location issue after.
Okay. No other comments?
Okay, the next IG is on impairment, so IG 11, and the reason why this was included was there was some discussion at the last task force meeting or the task force meeting in March about whether when there's a change in use, you automatically have to write down the asset, and the answer is, well, no, you would have to apply the impairment standards. So I got a few comments asking, well, this is really just redirecting you to apply IPSAS. Do we need an IG? So I would like to ask the board for views on whether this is even required.
Andrew.
So I think I was one of those to say that I do think it does just redirect you somewhere else. I think it's a very narrow specific set of factors where you take a natural resources and you reclassify it as held for sale. I don't think that happens all that often. So I don't think it's necessarily the most useful piece of guidance.
So are we content then that we don't need IG on this one? I mean, it sounds like that's the way forward, and obviously we need to think about the SMC that we would ask, but I think presumably we would actually ask whether we've got the right IGs. And then if constituents want to make a case and give us a fact pattern, then that's fine. We can work with that.
Okay. Okay, and the last, sorry.
Patricia, you are hovering.
It's a minor question, but I think it's very important because sometimes you say primary use, it's held for conservation, held for operational capacity or financial capacity. Sometimes it's in relation to the use of the assets, PP&E, but sometimes in the draft, you use different terms for some things, and I think I need to think better when I indicate primary use and or in the intention of use. I think it's. Thank you.
Yeah, thanks, Patricia. I mean, obviously that's important from a translation point of view. If you've got specific instances you can pass to Edwin, that would be helpful. Okay.
Okay, the next IG is on grouping of disclosures. So this stemmed from the discussion we had in March about what happens if you have natural resources that are in other standards. Do we have to, or are we going to require grouping everything together in terms of disclosures, even for those items? So we've drafted, or we're coming up with an IG that essentially says, well, first you have to consider if these are separate segments. And if they are segments, then you would have different requirements under that IPSAS anyway. But assuming it's not a separate segment, then essentially entities can have a free choice instead of whether they want to leave those disclosures separately. So let's say you have a natural resource that is PP&E, you can leave the disclosure in the PP&E note, or if you want to, you do have the option to group everything together in one natural resource node. So talk about things held for conservation, PP&E, etc. So any comments on that one?
Go on, Andrew.
I guess I struggle with it because I don't necessarily see if you're going to take an item of PPE or inventory that is a natural resource out of that individual line item, put it into another line item called natural resources. I'm not sure that that's actually giving useful information to constituents around the nature of the asset. If you look at typically how we classify assets, it's based on what you use the asset for. So it's PPE, inventory, etc. So I'd prefer that we rather leave these on the face of the balance sheet in the original line items. If you wanted to include in the notes a separate sort of reconciliation where you say, well, in PPE we had X, Y, and Z, put it in there, I'd perhaps allow that, but not on the face.
Lynn.
So I didn't read this as being the on the face bit, but I thought what we had discussed in March isn't quite reflected here either, because I thought we talked about an additional, so as an and disclosure note that would still leave your natural resources at a PP&E in that note, but have an additional note that would draw together in one place. And I'm not sure that's what this is quite worded as, but that's what I thought we had talked about, it being an additional note rather than extracting into a note. That does leave us with a question that I do want to come back to when we do the page turn there about what we have prescribed in terms of the description of the line item that we are saying is in scope of this standard, but I can leave that comment till we do the page turn perhaps.
Yes, so the intention for this was that it's only a note. We're not requiring a reclass. So it would be a note where you say included in PP&E is X dollars, etc. I guess talking to Lynn, it sounds like, and I don't know if you're going to bring this up at the page flip, but it sounds like you want a separate note anyway. So that would make this a moot issue.
Lynn.
Well, we can give you the highlight of the issue that that I'm going to raise at the page turn if that helps, which is at the beginning of the standard we say this is natural resources. Some of it might be in PP&E, some of it might be in inventories, and the rest of it is in this standard. But then we then say, but on the face of the balance sheet, you've got to have a line item called natural resources. Well, that isn't natural resources. That is natural resources held for conservation, because you can't have both. You can't say natural resources are all these things that might be in these 3 or 4 places, and at the same time then have a line item called natural resources. So I think we need to call the line item something different, is the point I wanted to raise on the page 10.
Edwin.
Okay, I guess it was Andrew's suggestion then that we have a separate note. And I guess my question to the board is, if we are requiring that separate note, then essentially this whole issue goes away, because now it's going to be a requirement and you wouldn't need an IG. So it really depends on how we land on whether we need that separate note.
Ross.
I could still see the IG having value for the separate note. You might just make it a lot shorter and just say, like, you know, natural resources that are used for other purposes other than conservation, how do you treat and say, well, you put them in a note, so you reconcile it.
So I think, you know, that's the sort of approach that we can take here in the IG. And I think in working that up, Edwin, I think obviously you need to bring in Lynn and Andrew into that. And then I think we need to come back to that, to Lynn's labelling point in terms of the balance sheet. You know, in terms of what are the options there, and that might be, you know, that there's a need for that label to represent, you know, it's either that term or it's a qualified version of that term if there are significant items held elsewhere, and that may be, you know, that's a slightly inelegant expression of it, but yeah, maybe that's what we need to do. Patricia, you're on this.
I want to understand better. The proposal is to have a note with natural resources regardless of the classification basis. But I think it's necessary to continue to have a item, specific item, because of the requirements in this standard, in the presentation of the financial statement. Okay. I don't know if EG is the appropriate place for the requirement about to disclose all assets in natural resource assets, regardless of the intended use. That's my point.
I think we need to see the IG drafted, because I think, as I understand it, there are potentially two options here. One might be that if this is a segment, then, you know, that's one of the options, but also there is the option to then add a note, and this is an add, isn't it? That you would then say, right, okay, here are the, you know, here's what is labeled as whatever on the, here is what's in PP&E, here's what's in inventory. This pulls them together so that you can see everything natural resources related in a note. So it's an additional, it's an option for an addition rather than a required note. Okay. So let's just finish off on the IGs and then we'll go through the page flipping.
Yeah. So the last item is actually an IE, and it's the item on transition. So what I was thinking of highlighting was the fact that we've now allowed prospective and retrospective application, but we're saying that for our natural resources that you control and can recognize on the date of application, regardless of which method you're doing, you have to recognize those on day one. So the only real difference with retrospective is if you had a natural resource that was recognizable in the past and you've sold it, it would no longer be recognized when you actually apply the standard. All retrospective would do is essentially restating our period deficit and surplus. So you will notice that when we do go through the page flip, there is an SMC now asking if this retrospective option is even useful, because essentially it's only going to produce different information in extremely narrow circumstances. And that's what we were trying to show in an IE, to numerically show you that the opening balance sheet and the opening net assets will likely be the same regardless of which method you're using. Okay. Any comments on that one?
So just to be clear then, in terms of the SMC that we are asking, are we including both retrospective and prospective as options? And we're asking whether constituents see that retrospective is necessary so that we can remove it. So the wording is sort of encourages them in that direction. Is that what we're saying?
Yes, that's essentially what we're saying. Yeah.
And we're okay with that. So you're not asking us to take a decision to remove the retrospective option?
Well, I think we have made a previous decision to include both. So I think for the ED, we should.
I don't want to tempt fate on that. Right. Okay. Liang, I've tempted fate.
Actually, I have some different thinking about the prospective method. So my understanding is, for example, if we maybe one way to interpret the prospective method is that if you have something you purchased or you got after after the effective day of the standard, you have to recognize it. So this is one way to understand about the perspective method. I understand now. Maybe you take another way. Is something maybe you purchased or you got before the effective day, and you should still, because after the effective day the assets are there, so you should recognize it. So for me, I'm not sure how we will stay this method. So
Yeah, so you've actually raised this issue in December, and we've thought about it internally with the other staff. And what I've noticed when I looked at the other IPSAS and also back to IFRS was whenever it's a standard that deals with assets and liabilities as well, we take the approach that if it still exists on the date of application and you still meet the recognition criteria, even if it's prospective, you still have to recognize it. The only standards where we say, okay, only apply this going forward after the date of initial application is when the standard relates to something that's related to, let's say, a revenue account or something else in deficit or surplus and deficit. Like, for example, transfer expenses is one where we said only apply the standard from this date going forward. And that's because there is no cumulative effect on the balance sheet. But when we're talking about an asset, I think it would be almost misleading to have items that could be very material on day one that you're not recognizing because you didn't acquire them on day two, right?
I can see Liang still mulling that one, but I think for now we leave it. Oh, sorry, Renee.
Yeah, what I would add is that because of the nature of natural resources, because in a public sector, many entities are sitting on natural resources at the time of transition, I think we need to have guidance that clarifies what they need to do on transition with those that they're sitting on, right? It's not about it's not through purchases. It's often by non-exchange transaction or the power to hold the asset in the first place. So I think it's relevant to use that approach here.
Okay, thanks, Renee. Okay, so that then moves us through the IGs and IEs. Yep.
Yeah, so we have one last quick, I guess, issue with the IGs and IEs, and that's where to locate some of these. So for the one on impairment, it sounds like we're deleting it, so that's off the table. But there are some IGs that really relate to another IPSAS. So the first one was IG4. So the question is, well, should this IG on unextracted subsoil resources really be in IPSAS 12? Because once you've extracted the resource, then that's inventory under IPSAS 12. So the staff's initial thought was, well, before you actually do the extraction, there is no accounting at all under IPSAS 12. So it wouldn't really make sense to have an IG there saying, well, here's something that could potentially be in this standard, but you've done nothing to essentially cause that item to exist yet. So therefore I propose that we just leave in natural resource, because this issue only comes up when constituents are thinking about subsoil resource in the natural resource context. And the other two items are in IE1 and IE. Oh, sorry.
No, I mean, I saw nods to that, so I think we're content with that recommendation on placement.
Okay. The other two IEs that we looked at were IE1 and IE2, and those have to do with scoping. And the reason why this came up was because the conclusion in the IE was that the items we were talking about are really PP&E. So you would go to the PP&E standard to apply those. So our thought was, well, this is really just signposting to go to PP&E. So if you were to have this example in PP&E, you're already in that standard, so you wouldn't need to signpost to it again. So yeah, I see Andrew nodding. So our proposal is just to leave this here as a natural resource example.
Yep, I think we're okay with that.
Okay, the last example that we looked at was really the land that we could not value. And so in our example, we're concluding that you are providing disclosures. But for this particular example, when we think about land, that's normally within PP&E or investment property. And most people would not think about land as a natural resource in terms of financial reporting, because it's already under existing IPSAS. So our proposal is to have this example, but actually relocate it to an amendment to IPSAS 45 to say, here's an example of land that you can't value. And in IPSAS 45, there is actually guidance that says if you have something that meets the definition of an asset, but you cannot reliably measure, you have to provide certain disclosures. So the proposal is to remove the land example from natural resources and move it to IPSAS 45 instead.
David.
Well, I would disagree. I think some people will be thinking of land as a natural resource, particularly if it's not under infrastructure or buildings or used for real estate. So I think it should stay here as a signpost.
Okay, I see nods to that.
Okay, so we will leave that in here. Okay, so.
Oh, sorry, Angela.
Oh, sorry.
Thanks, Ian. I was just going to say, land's probably not the best example, because I think you do want to leave it in the standard to say what do you do when you can't reliably measure a natural resource. So it's a bit unfortunate that land can fit under two standards. So, but I think leaving it here is probably the best thing to do at this stage, and it's probably a little late in the day to think of a different example of a natural resource that can't be reliably measured.
I mean, I think there's a strong reason why you would want to give that example in terms of land, because certainly in the past, this has been raised as an example of something where, for example, in the US, actually, there's a lot of land that the government does actually have responsibility for, that it's acquired through various means. But actually, it just sits there. It's desert or scrub land, and therefore,
I wondered then, Ian, whether it was sort of a geographical feature. It is land, because land can cover so many things. I take your point. I mean, it's one of those things. I sort of put my flag down because I didn't want to sort of slow slow you down, but land does have such a broad characteristic. And there is parts of unique geographical features which it's just so hard to value because it's not like farmland or other land. It's quite unique. But anyway, just food for thought. I didn't want to slow us down, really.
No, I mean, the reason why it's there is precisely because in some jurisdictions it is significant. So notwithstanding what you say, I think it's important that we do actually add it as an example. Okay.
Okay, so I guess before I move on to the page flip, were there other examples that board members wanted to add? I know we've been asking for input since December, but we haven't really received any so far.
I mean, I guess we've got a fair selection there of IGs and IEs actually when you look at it, and I do think that we should actually ask a specific matter for comment because there are some key principles, and we know that constituents do struggle with various issues. So I think, providing that we ask that question in terms of non-authoritative guidance, do you see the need for any additional IGs and IEs, and if so, why? Then that allows us to address that point. Okay. So we move into the page flip, and Ross will lead us through that.
Yeah. So we don't really need the slide for this one.
No. Okay.
So starting with agenda item 9.3.1 on page 1, the cover. Already got one.
Claudia.
Thank you. I'm just wondering if you should relabel the standard to tangible natural resources, as the whole standard only deals with tangible assets and intangible are scoped out. So it's much easier than to understand which topic we are covering.
Funny you should say that. I said to staff, I'm surprised nobody's raised that one before. What do colleagues think? I think there is a logic to Claudia's suggestion. Does anybody disagree with that? No. Okay, so it is tangible natural resources.
So back into the document, page 2. Page 3, request for comments.
Let's see.
Yeah, since we have agreed that the ED would be tangible natural resources, then maybe we have to revise also the objective of the exposure draft to indicate that. Thank you.
Yeah, there will be various consequentials we need to deal with. Lynn, are you on SMCs? Yep. Okay, go ahead.
So it's on SMC1, and I wondered if, as drafted, it's absolutely getting us what we want, because I thought we had a discussion at some point in time that we couldn't identify for ourselves any tangible natural resources other than those held for conservation that would fall within the scope. And I thought at one stage we had indicated we wanted people to come back with specific examples if they had them, and as drafted, SMC1 isn't doing that. So whether or not it needs another SMC to do that, but as drafted, SMC1's not doing that at the moment.
Or we do a two-part one. So shall we do that? Because then it links the rather like we did with measurements. So okay.
So continuing into the document, page 4. Page 5, TOCs. Page 6. Page 7 takes us into definitions and recognition.
Yeah, Patricia, and then David.
I'm not sure about the paragraph 12 because if we change the
Can we just deal with definitions? Oh, sorry, no, it is on the sorry. Okay,
it's a
yeah.
page 7,
Yeah.
not it's page.
No, it's okay. Sorry.
Okay. Okay. Okay, it's a paragraph 12 about this paragraph. Normally, it's not normal to have similar paragraph in other IPSAS because if I change the information or the possibility to estimate, I recognize based on IPSAS 3, no?
So this is talking about changes in your ability to measure something. It's not changing the facts and circumstances around the recognition of the item.
I control.
Yeah, it's saying if you control in the front.
But I think the recognition criteria said you need to control the assets to recognize. When you control, you recognize. And I don't know if necessary this paragraph 12.
Oh no, so this is getting at situations where you control something and you should recognize it, but you can't measure it. So it's still your asset, but right at that point when you've decided you have control, you can't assign a number to it. So let's say a few years from now, all of a sudden, oh, you have a way of recognizing or you have a way of measuring that, then you would assign a number to it. But you've had that asset since a few years ago. So essentially you're restating a prior period.
Yes, this is I understand. But my question is, it is not only specific for natural resource. I can have all the assets with the same situation. This is my question. Why to have a specific requirement for natural resource? Because I can have this same situation for the assets.
I think the reason why we're including it specifically here is because this could well be a situation that arises commonly. Ross.
Patricia, are you suggesting that we just reference IPSAS 3, where we would deal with that? Is that what you mean?
I don't know if I need my own to remove, because when I have a possibility to reliable measure, I change the,
Yeah, so the only reason why we explicitly had this here is because it could be a very common situation for natural resources compared to other assets.
David, are you on that then?
Well, I wasn't particularly, but I think I might be now. Only I think that illustrates the point I was going to make. Some of this text, particularly the lighter grey text, I do get a bit confused between bold and light grey, but it sounds to me more like AG. And so I wonder whether staff should actually go through this to see whether some of this should be an AG. And I think that probably would help Patricia in this particular case. I mean, it's not just this page, it's throughout the standard.
Okay. So I think if we have that as an instruction, it doesn't really change the drafting. I think on this one, maybe what we do need is a basis for conclusion or something like that to make it absolutely clear what we've just talked about, and to record the fact that we have talked about that. Claudia.
Thank you. I just would like to add what Patricia said. We have already IPSAS 3, and it's maybe not that clear in IPSAS 3. Maybe it's a possibility to have an amendment also to IPSAS 3 to make clear that if some other assets will be reliable, measurable later on, it will be an asset. Maybe that helps as well.
I think we just revised the definition of change in accounting estimate as part of the improvements project we just put through. So I think there's additional clarifications coming through kind of behind the scenes right now.
So I think probably what we need to do is actually then staff need to just reflect on that and come back either with essentially across reference that would be to the updated or the proposed update to IPSAS 3, or we put this in application guidance and we just put basis, we record what we've done in the basis of conclusion. So I think there's two possible alternatives here, and we just need staff advice, having had a kind of clear read and thought about it in the context of the proposed amendment. The alternative is that we do if the amendment gets approved in ED 90 or whatever we're talking about. I don't know. Anyway, I think we just need a bit of clearer, specific advice on that placement issue. Okay. Yeah. So I think we move on.
So back into page 7, taking us into page 8, where measurement starts.
Clearly a lot of excitement on page 8. Andrew, you were marginally before Claudia and then Patricia.
Do you want to talk about the cross references to the other standards here or in the later agenda paper? Because I think all right. So I guess I've got concerns with the references to the other standards. So we've got references to 45 and to 46 later for the disclosures. I think the standard needs to be self-contained. And if there are principles that apply on how to determine the initial recognition of cost or measurement of cost or the subsequent measurement of cost, they should be included as a self-contained standard. I think the CAG discussion was one of the reasons we started with this standard to say that it potentially has a different preparer group given the nature of these assets. So that would support having the guidance in here. But also we've got, for example, in paragraph 19, where we say that, some of these items are typically not applicable to a natural resource. Well, then I think let's put the guidance in here and take those parts out and make it applicable to a natural resource in here. So that's my concern on the 45. On the 46, that's later, we made an explicit decision when we did 46 to put the disclosures into each individual standard. So I think we need to be consistent with that in the standard as well. So I don't support these cross-references.
Can we just sort of pick up the general principle? Because I don't think that, basically if people are using IPSAS, it doesn't seem to me unreasonable to actually cross-reference to another piece of guidance, because we are at risk every time we duplicate guidance that, you end up at some point in time, making a change somewhere and not somewhere else. And I think that's particularly the case with measurement, which we intended to be. So, I don't know. I mean, I'm just, is there a reason why we can't do that? Why we can't cross-reference? I mean, I get there's a preference, that you have a preference, but I think also, do we really need to reproduce large slabs of text? And there would be quite a lot of text if we do this all the way through.
So I think we've got examples here where we're saying not all of that text directly applies and is not applicable. So we're referring constituents to 45 and saying, well, not all of it applies. Use your judgment as to what does or doesn't apply. And I think that's our role, is to decide what of that guidance is and how it should be applied in a natural resource space. I think the counter argument is if we just refer to 45, if we change the guidance in 45, we run the reverse risk that it doesn't necessarily then apply to natural resources. So by duplicating it, then it's actually safer from a natural resource standalone perspective.
Edwin?
Yeah, so the stuff that wouldn't apply is talking about things where you're essentially constructing a PP&E. So that's the stuff that, like, you can say that it applies to natural resources, but it just would never happen. So that's what that sentence was trying to refer to. And if we were to delete that reference to saying things don't apply, I don't think that would hurt. Like you would just read through the paragraphs and say, yeah, I'm never going to construct a natural resource. So you wouldn't have to talk about that. My other comment is I was struggling to see references to 46 because I explicitly tried not to do that. And I thought the paragraphs you emailed me earlier were both referring to 45. So nothing really refers to 46.
David, are you in on this?
Yeah, I mean, I'm picking up actually just on a point that Edwin's made. I was going to suggest that actually you just delete that sentence. You know, an accountant should be using the professional judgment to apply the sections of those paragraphs in 45 that would apply. On the point of 46, then the phrasing that's been used has been used in other standards to refer preparers to the relevant cost or measurement techniques to be used in 46, so that's fine.
So you're proposing deletion of the last sentence in 19. Does that help, Andrew?
Sorry, I think I'm still of the view of I'd prefer the guidance to be in here. I'm happy to be the minority view, but that's still my view.
Dave?
I was just going to say, I understand your point, but I can't remember what meaning it was, but I remember Edwin had a table where he was comparing different accounting treatments for natural resources. And I thought the board was very explicit in their decision to make sure it aligned with PP&E. So I understand the risk that in the future, if the guidance changes, you might want to revisit from natural resources. But I thought based on a previous board decision, you wanted to make sure the guidance always aligned with PP&E. So if there are changes to PP&E, you'd want those changes made to natural resources as well.
So I think where we get to is we should make sure that we have, summarized this argument in the basis for conclusions. And if it helps, then I think we actually put a specific matter for comment in to say that's the approach that we've taken. The constituents agree or disagree with that. And then, if they come back and say we really want it, then okay, Okay, so Claudia next, and then Patricia.
Okay, I'm on paragraph 16, where we talking natural resources recognized as an asset as a result of a non-exchange transaction. The non-exchange transaction have different definitions through our literature, I figured out. So in the conceptual framework, we have in the preface something that's called in a non-exchange transaction, an entity receives value from another party without directly giving approximate equal value in exchange. But what we mean, and we have this same or slightly same definition in the glossary, but in the conceptual framework, there's another definition and its other point where it says assets may also arise through non-exchange transaction, including through exercising of sovereign powers. We could be explicitly clear if you mean including sovereign power in this definition or not, because we have a variety of definition, and it would be quite help maybe as a footnote to acknowledge that we will have maybe this glossary transaction. They are not exchange transactions, including exercising of sovereign powers.
Edwin?
Yeah, so going back to IPSAS 46, we don't actually talk about non-exchange transactions. 46 refers to when an event that is not a transaction in an orderly market, which would include non-exchange transactions. So I propose that to be consistent with everywhere else in our literature, we should just say when a natural resource is recognized as an asset as a result of an event that is not a transaction in orderly market, and then comma, which includes non-exchange transactions.
Okay. That seems fine. I mean, I agree with Claudia. I think we need to be consistent in terms of how we've approached it. Okay. Trisha, next.
In relation to mentioned the IPSAS 45, I think the problem here is because it's very difficult to understand that some kind of expenditure not compose the assets, the natural assets. In the majority of the items in IPSAS 45 does not is coherent with the definition of natural assets. Because of this, I think it's better to bring what costs I can consider here, because facilitate to understand that some cost is not part of the natural resources.
I mean, I think we have already
sense,
been around that one, Patricia, with Andrew, and I think that's, you know, we've landed in a place on that, so I don't want to reopen that particular discussion again.
Okay, I think it's SMEC should consider
well,
this point.
I think we hear your view. We heard Andrew's view, and I think we've got a way forward on that.
Okay, next point. I think here in paragraph 14, in other paragraph, you consider part of natural resource as other assets. I think when I can consider a part of natural resource as natural resource, but not other assets. For example, about unit of account, that part is natural resource, part is PP&E, and then I think it's not coherent, because like in IPSAS 45, when I consider part, for example, measure different unit to measure, because there are some characteristics that justify I not consider all the assets, but a separate part of the asset. But all the assets is PP&E. In this case here, when I have a component that is no natural resource, it's another asset. It's not in the scope of this IPSAS. There are other parts, other paragraphs that I can indicate this for you. And the other point in initial measurement, you refer to natural resource as recognized natural resource, but I am in the initial measurement. Then recognized, I think it's not appropriate here.
Okay, I can circle back with Patricia after to go through all the paragraphs.
So, I mean, this is a drafting point, isn't it? Because what you've got is actually, you've got essentially your unit of account changes, doesn't it? And then you're saying that part of this, I don't know, part of, you know, we sell off part of a, you know, forest or something like that for, you know, for agricultural purposes or something like that. So it's actually how we describe it here that's the issue. Yeah.
In some part of the text, I consider this part as agriculture proposed as natural resource. It's not correct in my view.
Sorry, this is saying if you're changing it from a natural resource to something else. So using the forest example that Ian just raised, is if you were carving out a section of a forest that you were previously conserving and selling that, then that would lead to a reclassification.
No, when I have a forest, but part of the forest is a park for financial capacity, or it's not more natural resource, because I use for hand reserves.
Yeah, I don't think we disagree. I think it's just we need to get the drafting sorted, because in my example, then that would actually become an item that I would account for
separate
separately.
item.
And
But in the text is yes.
So that's what I mean by the Okay, all right. No, I think we're clear on that. Okay, thanks for that.
So back into page 8.
Patricia, you're not so okay.
Page 9.
Andrew.
We speak in current value model that you can use if it's for health and service percentage, operating capacity, or financial capacity. I'm not convinced that there's anything of financial capacity that could resolve into the standard. I think if it's held for financial capacity, it would be in PPE, investment property inventory, one of the other asset standards. So I think anything that gets into this one would only be held for operational capacity.
Yeah, so we did consider that. The way we've worked that into the ED now is the core text is pretty broad and open, and then in a separate AG, we shut down the financial capacity and say normally it's operating capacity. So I do think it'll be much more consistent and clearer if everything throughout the core text just refers to operational capacity.
Okay, so if you can go through and make that change. Okay. Thanks. So Lynn, sorry.
Yeah, sorry, just to be clear, and I know it would be going back to page 7, but in our recognition, though, we talk about future economic benefits as well as service potential. So do we need to revisit that as well, given what you've just said?
Yes, I think we do. Thanks for that spot.
Back into page 9. Page 10.
Andrew.
On paragraph 34, I think we need to do a little bit of work there. It talks around the depreciation of a part of a natural resource. I think we just need to be careful how that part is defined. You know what we're trying to get to, but I worry that people will take a herd of rhino and say, well, each individual rhino is a separate component that needs to be depreciated over its life, which is not the intention, right? So I think we just need to put something in an AG or something just to explain how you would determine a component for a natural resource.
Okay. I mean, if you can work with Edwin on that, if you've got any suggestions, that'd be helpful. Trisha, then Lynn.
It's in the same paragraph, but I think EG 20 presents more criteria than the core text. The core text only mention the relevance of the cost. And AG 20 mention about, for example, risks, the similar risks. I think I think we need to bring some criteria in the AG 20 for the core text. AG 20 is more complete than the core text.
Yeah, I can work with Patricia to go through that.
Okay. Lynn.
So I wanted to take us back to paragraph 31, which goes between pages 9 and 10, and it was the last sentence, which the easiest answer at this stage may be to delete it, but I didn't want this last sentence to result in an industry of people having to look at future budget predictions or not. So I just think it ought to be deleted.
So anybody object to that deleting that last sentence? Okay. Thanks for that, Lynn.
So carrying on through page 10 to page 11, derecognition at the top.
Lynn.
So mine was on para 46, which is not derecognition, but it is on page 11. So I'll hold on in case anyone's got anything on derecognition, if that's it.
I think you have the floor there.
So it's paragraph 46, which is the paragraph that in bold makes it is where my issue is about the description of the line item. You can't. It's just not consistent to say you can have natural resources in many categories and then mandate a line item called natural resources, because that is not what it is. That is misleading to me.
So I think that you know, perhaps back to the comment I made earlier, that what we should do is say something like, unless there are other items meeting the definition of a natural resource are included within other categories on the balance sheet, in which case a more precise term should be adopted. And that's not very elegant, but that's sort of the sense that we have, I think.
I think it might be neater to call it natural resources held for conservation. Unless somebody can point me to an example in the responses to the SMC or something
But
else.
we're not at that point at the moment. So we're not writing a standard for natural resources held for conservation, are we? At this stage, and I know that you want to set the challenge up, but we're not there yet. So I think we have to have something more generic, and that's where I'm proposing that formulation, unless anybody can come up with something that meets the bill better. Andrew.
As a proposal, instead of just leaving it as natural resources, can we rather just put in here that you should name that line item based on the use of the natural resource? For example, natural resources held for conservation, but we don't just say it is natural resources.
I don't think, I think that's not an unreasonable way forward. That meets the concerns. Okay. So I think Edwin will just sort the drafting out around that. Are you coming in on that, Patricia? Or okay. So then I'll go to Claudia.
Sorry, just want to add. I would prefer to have not to call it natural resource, maybe intangible natural resources on the line item, because we are talking only about tangible. That's
fair enough. Patricia.
Never that. In fact, I have a question, because I'm not sure that natural resource is object of a leases and lease back. You explore this possibility, because for me, I try to think about the transaction, but in the paragraph 43, I try to realize the transaction, but I could, but you can share with me.
Yeah.
Edwin.
So you're right. I don't think it's realistic, but this was a question. I guess when we looked at the responses to CP and looked at recognition and e-recognition, we did get a question on what happens if there's a sales leaseback. So there was somebody who asked about it, even though it's not realistic at all. So I would be open to deleting the reference if the board feels that it's not necessary.
Can I? Maybe it's one use of financial capacity, but I think we need to wait for the responses. It appears something different, but initially I think it's better to delete.
So I would say, I think we need to actually record the fact that we have logged the fact that that comment was made in respect of the CP, and the board decided not to include guidance given the rarity of such transactions. So then we delete. Okay.
Oh, that takes us back into page 11.
Oh, Lucy, sorry.
Thank you, Chair. I'm trying to compare the paragraph in the disclosure in IPSAS 45, and we don't normally discuss the objective of the disclosure requirement. So I think paragraph 48 may not be necessary, but we can immediately go to the disclosure requirement that are in paragraph 50. Thank you.
Edwin.
So you're right. We don't have this objective paragraph in 45, but I think that's really a result of the fact that 45 was amended from 17. If you look at the more recent IFRSs and the more recent IPSAS, we do have an explicit disclosure objective in each of our standards. So that's why I added this in. So it's really just to be consistent with the more current IPSAS.
So you could argue that's an omission in 45, but anyway, let's not go there. Okay.
Okay, that takes us into page 12. 13. Oh,
Patricia on page 12.
In page 12, I think you need to consider IPSAS 46 or 26 too. Yeah.
Sorry, if we're deleting all the references to financial capacity, I think 26 would also be removed because you would no longer have a cash generating asset. So the impairment would just be 21.
Sorry, I lost something in this phone. Because the decision was to not consider the assets we've held for financial capacity more. Yeah. Okay. Then it's the other modifications. Okay.
Okay.
okay, back into 12. 13. 14. 15 takes us to the end of the core text. 16, AGs. 17.
Andrew.
AG7, that's supposed to help us try and distinguish between a asset held for conservation and a heritage asset. I don't think is very clear to me. I read that and I still found myself questioning which standard am I actually in here. Thought we had spoken at one of the previous meetings about removing environmental out of the definition of a heritage asset in 45. And then because we've also would have the scope exclusion for assets in the scope of this, I thought that was a clearer way, at least in my mind, rather than the guidance that we've got proposed here.
Yeah, so we talked about that, I think, at the last meeting, where staff proposed to amend 45 to delete the environmental reference. But at the meeting, a few members actually said it wouldn't matter. So that's why we didn't really go ahead with the amendment. But what I'm hearing is it's probably easier for constituents if we do the deletion and just say that natural resources, which are also heritage items, would be within the scope of this. So I can make that amendment.
Are you on that, Lynn? Okay.
Yeah, I just want to be clear. Is that amendment, are you going to take environmental out? If so, do you not also need to take the word natural out? Or so that's what I just
Yeah.
Yeah.
So I think if we do that, I think we need to explain that we've done that through basis for conclusion, and potentially we need to think about a specific matter for comment on that as well. So I do think that's something that we need to make sure is okay with our constituents. Claudia. Oh, sorry. And so if it goes Claudia and then Renee.
I'm sorry, I was too late. Page 16. It's AG2. If this flowchart really belongs to an AG or is it more than IG in illustrated guidance? Because it says something about it is provided as an aid in the application of, and it's not take place of a standard, and the application guidance, it's not optional. So it's but that's just a comment I have.
I don't have an issue with moving it to the IG. I think we did have some feedback that it would be more helpful if it was upfront or earlier in the standard. So that's why I moved it up. So, but if we are keeping it here, I can see your point about it being an age. So that kind of implies it's not authoritative, and I can revert that.
Can we just check on consistency with other, because I mean, I know it's now superseded, but I do remember that we had a flowchart in IPSAS 23, which was actually in the core text, but actually it was clearly identified as non-authoritative. But the placement actually helped in understanding the flow of the standard. So should we leave that one with staff to have a look at the current literature and then to sort the placement accordingly? And if we need to put that, if you like, disclaimer, then okay. Sorry, Renee.
Yes, I'm actually on the same spot too on page 16, but in the flowchart, like I think now that we've advanced our thinking, the logic would be that we first have the definition, then the scope, because you first determine if you have a natural resource that could meet the definition of an asset, and then you decide which standard to use. So I would just flip them.
Okay, yeah, no, see nods to that. Okay, and again, I think that comes to placement actually in terms of, it may well be better as non-authoritative, but in the core of the standard, so it helps you just understand that flow. Okay. Andrew.
On AG9, the examples under A and C would not be examples of natural resources within the scope of the standard. That'd be somewhere else, and I think that might be confusing to constituents. So I'd suggest to remove those and then either just keep B or bring in other examples of natural resources that would be within the scope of this standard.
I wonder whether we could actually sort of kind of go both in a way, because I think it's quite helpful to get that bridge into other standards. So maybe we need things that would be included here in contrast with other things that would be dealt with elsewhere.
I think that's fine. I think we just need to make the point here then.
Yeah, no, I can see your point in terms of the way it's phrased at the moment doesn't make that clear. So if we can fix that in that way. Okay.
So back into page 17, page 18.
Patricia.
Thank you. Paragraph AG13. In the end of the paragraph, said that cost encouraged subsequently to add to or replace part of the resource. I think it's not part of the recognition, but it is part of the how to treat the subsequent expenditures, if add for the value of the assets or consider it as an expense. Because the paragraph 9 to 15 is about recognition. And like here in the end of this paragraph is about the cost incurred subsequently. I think it's not so.
Sorry, this was meant to say that if you have subsequent expenditures, you have to analyze it using paragraph 9 to whether and conclude whether you capitalize or expense. So maybe I should just word this better too. Yeah.
Yeah, because I think it's very confusing here. Me too.
Yeah, okay, so, if you can work offline on that, that would be helpful.
And paragraph AG 17.
Yep, go ahead.
When for the natural resource acquired through an exchange transaction, this paragraph is incomplete because there is no other requirement about how to consider, how to measure initial measure when I have exchange for natural resource or the non tangible or non financial asset. I think it's about this in this paragraph 17.
This one is really tough.
If you got, sorry, can I clarify? When I have the acquisition is based on for change the natural resource to non financial assets. Similar situation I have in the PPNE IPSAS 45. And the IPSAS 45 presents the requirements in paragraph 21 to 23. And the requirement here is, I think it's only about the 22. The requirement here in this is incomplete. I think.
Yeah, so this was meant to capture essentially how you're measuring costs. So I think in 45, it goes through both exchange and non-exchange transaction, but this is only meant to cover exchange.
Sorry, can you come back?
Yeah.
For me, this is for a specific situation when the acquisition of the natural resource is not based on consideration, but there are exchange for natural resource for non-financial assets. In this case, there are other requirements, not only this one, but others in paragraph 21 and 23 in IPSAS 45.
I can have a look.
Yeah, okay. Thanks for that, Patricia.
Back into page 18, 19. 20. '21. 22.
You are so fast.
Where are you?
Yeah, I'm 20. In general, I think the subsequent expenditure are not so clear in this draft, especially because
So you're on AG 24?
can I? No, I'm 20. About subsequent costs, subsequent expenditures. You said about the cost of the day-to-day maintenance and not about how to consider for expenditures that I can increase the assets, for example. I think it's not complete here. How to treat the subsequent expenditures. It's page 19, AG 22. And after that, I have AG 24 too. And because the draft present requirement for subsequent expenditure for on unrecognized natural resource, but about the recognized natural resource, only about the maintenance, not considering the criteria. If I increase the potential services, I can incorporate the expanded in the value of the assets, for example.
David, are you in on that?
Yeah, I think it's just a question of changing the subtitle, because it's that paragraph AG 22 is just about maintenance costs. The subsequent costs associated with the natural resource itself are in 23 and whatever. So I think some finessing of the title should help there.
Okay. Thanks for that. Liang.
I may miss something or please forgive my bad memory. For the section of unit of account, may I check, do we have other similar guidance such as in other standard?
So I was instructed to look at PP&E, but PP&E doesn't really have much other than one or two paragraphs, which is already incorporated in here. So what I did was I actually went to the updated framework, and that's where I based a lot of this from.
Okay. That's okay. Because actually, my experience is actually the unit of account problem is always very controversial and very maybe should high judgment in practice. So it's good to have such guidance.
Okay, thanks. Lynn.
Yeah, I just wanted to support Patricia on AG 22, and perhaps I'm not sure that the answer is as simple as David's put it. I think there might be a bit more work that is needed around that piece, because I don't think it's entirely covered in 23, Patricia's point.
Okay, well, I think we just need to make sure that we've nailed the drafting on those. So I think if you can work with Patricia and maybe with David's help offline on those.
So back into the page flip, page 21. That brings us to 23, where the amendments to the other IPSAS start.
Andrew, where are you?
I guess it's on all of the consequential amendments. We currently are changing the scope out of the other standards to only recognition and initial measurement. That should just be a flat out exemption now.
Yeah, so I already made that change after you've emailed me.
Okay, thanks. That's spot, Andrew.
So, sorry, page 22, 3, 24, 25, 26. And then that brings us to the basis for conclusions on page 27. 28. 29. 30. 31. 32. 33. 34. 35.
Okay. So I think we've got a number of areas of, where the drafting needs clarification, some amendments to specific matters for comment. Now, I know, going back to the original discussion, that we're not going to bring the IGs and IEs for review at the check-in, but I'm wondering, and I think this is for discussion, but it probably would be quite helpful whilst these amendments are fresh in our mind, to bring a marked up version, implementing what we've agreed today, back to the check-in meeting. And we'll deal with that just as the first item, if that's okay. I know, Renee, there's logistical issues, but I think that would be worthwhile just doing that. So not IG and IE, but the amendments that we've identified through the page flip today. Okay, and then that should place us in a good position in terms of approval in September. Edwin, anything else?
No, that was it.
Okay, so that puts us 15 minutes ahead. But I think we should actually close today's formal session. We've got various sort of task force meetings and meetings with staff going on for the rest of the afternoon. So I think we conclude the formal business for today at that point in time. We will start again tomorrow morning. He says checking the agenda. Are we on a 9 o'clock start tomorrow? Yeah, we're on a 9 o'clock start tomorrow, and that's where we look at the results of the 4th Academic Research Forum. So thank you very much, everyone. Good work on both the projects that we looked at today. And have a good evening, and see you tomorrow morning. Okay, thank you.